candidate for Senate is running ahead of the Republican candidate. In every race of the last couple of years, virtually every race, Democrats have done significantly better than forecast, better than the polling pre-race would suggest. So there's a level of success that Democrats have had running for office across the country over the last several years that would support the idea of much more enthusiasm than people think. In addition, there are things like abortion on the ballots in key states that we think are going to drive Democrat turnout to a significant level that is not being captured adequately. So the House is in play. In the Senate, every close race, swing state race in the Senate is leaning Democratic at the Senate level. And we think that the issues around Biden versus Trump are going to break for Biden, as arguably they are already doing, in a sense that if you look at polling a couple months ago versus today, Biden is doing better. And granted, polling now is not indicative. It's too early. But I think tonight's debate is going to be very, very interesting, as everyone on the panel here has pointed out.
Jay, I just want to finish on fixed income. Lisa talked about your market calls. How do you think bonds would respond to the outcome you're looking for?
Which one?
Treasury specifically, Jay. Treasury specifically. No, I just want to understand, if you get that blue wave, how does the Treasury market respond to that?
Well, I think President Biden's policies on the fiscal side are much more in line with kind of controlling the deficit, right? He's not going to extend the tax cuts. Anne Marie was saying earlier, 25 is a huge year because of the Trump tax cuts either have to be extended or reversed. Biden's going to reverse them. Trump is going to extend them. So I would think that the market on the fixed income side in a Biden win, depending on where the economy is at that point, it's kind of hard to say, right? The economy is going to drive it. I think probably either backs up the bond market a little bit. If Trump wins, it's going to be, I believe, a significant backup in yields, which craters the economy. And as I said, could potentially put the Fed in a box, creating significant uncertainty around the currency, and the dollar breaks lower and it gathers steam, and that you have a dollar that's crashing, I think, versus talking about the yen at 160. Yen fair value is 100. It's at 160. It could go to 140 very, very easily.
Very, very different view to Alan Ruskin at Deutsche Bank from 30 minutes ago. As you say, Jay, that's what it takes to make a market. Can I just say, Jay, we've got a presidential advisor in the green room. He might be reaching out, looking to hire you. Jay Pawlowski at TPW.
I'm available.
Jay, thank you.
Thanks,
Amos Hogston coming up in about 15 minutes' time. I imagine if Amos is watching this in the green room right now, he probably likes what he heard, right?
Absolutely. A blue wave. He's better for the economy, better for the market. He's definitely, the White House, I think, maybe
some of that stuff is pretty contrarian. Let's just put it this way. Not the stuff on President Trump, if he gets a second term, what he would do, what it would mean for inflation. I think that's fairly consensus in the economics community. But just this idea that you get a blue wave and it's constructive for fixed income, for treasuries, I think a lot of people right now, the consensus view is blue wave or red wave, that treasury market sounds off come November.
And you have different views on who would be worse potentially for the treasury market, depending on expectations for spending, et cetera. There also are very countering views on who has conviction to win. You have him saying, absolutely, it's going to be a blue sweep, and you have Steve Eisman coming on and saying 200% chance that Donald Trump is going to get reelected.
One thing I will say, it's really hard to have conviction right now, so bless these people who do. When we have so many months left ahead of us and a black swan event could happen, a number of events. But also, Jay is talking about how Biden is doing better in the polls. He just had 2 bruising polls, and one of them, although he's saying that abortion is going to be a big issue and they're trying to campaign on this, the economy and inflation remain #1. Also, even some Democratic voters are starting to say immigration's a top concern. And when you look at those 2 issues, on the whole, they trust Trump more than Biden on it. So if they're going to go out on the #1 or #2 issues, it's lining up behind Trump's favor. We've
got months and months of scenario analysis ahead of us. This is only the beginning. The debate starts a little bit later. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. SoftBank's Vision 2 fund is investing in Perplexity AI. It's giving it a $3 billion valuation. The deal is Masayoshi Son's latest bet on a sector that he deems crucial to securing his legacy. Perplexity is a U.S. startup, and it's trying to distinguish itself from the other AI chatbots by providing more real-time information. Amazon, meanwhile, is launching an online storefront for low-priced apparel and home goods. The company plans to start shipping goods directly to consumers from China. Amazon has sought to hold its ground with the promise of speeding shipping. It previously encouraged Chinese merchants to use logistics services that kept merchandise at U.S.-based warehouses. This is Amazon's biggest move to date to counter the rise of discount upstarts like Temu and Shein. Elon Musk's SpaceX will sell insider shares in a tender offer at a higher than expected price. The shares will be sold for $112 a piece. That values the company at close to $210 billion. That's also up $30 billion from when they last got a valuation in December. A source says the jump in value is due to significant investor demand. The valuation is a new record for an American private company. And that's your Bloomberg Brief, John.
Danny, thank you. We'll check in with Danny again in about 30 minutes. Up next on the program, the rematch begins.
Everybody knows he's a liar.
But you
I just want to make sure.
Joe, you're the liar.
Take a look at what he's actually done. He's done very little.
You could never have done the job that we did. You don't have it in your blood.
We handed him a booming economy. He blew it.
That conversation up next, live from New York City this morning. Good morning.
Could face bigger challenges next.
It was going to keep rain World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Live from New York City, welcome to the program. Equity futures down 0.2% on the S&P 500. A bigger mover in the pre-market for you. Walgreens has a new range for the year. For full-year EPS, 280 to 295. Previous range, 320 to 335. They've slashed the outlook. Elisa, this is a tough retail environment. There's a report out there, too, that they're going to close a lot of stores.
Yeah, thousands of stores potentially. This was reported by the Wall Street Journal. They interviewed the CEO of Walgreens, Tim Wentworth, who said 75% of our stores drive 100% of our profitability today. What that means is others will have to take a hard look at. He also went on to say that they face a difficult operating environment, including persistent pressures on the U.S. consumer. To me, I wonder how much that's the story and how much this is a story of some of those plastic containers that you walk into and you have to get someone to come and unlock.
Unlock the toothpaste?
I'm serious. I think that doesn't that sort of hamper your desire to go into a drugstore to buy your basic goods?
Yeah, it's not exactly the nicest experience, is it? You want to pop in, you've got to call an assistant, you want to unlock the toothpaste?
Yeah, and then you have to stand there waiting with other people who are frustrated, who want to be served first. They come after a while, then you get your one thing, and then if you want something else, you don't go.
This has been going on for a while. Their stock is down by a little more than 5%. More on the consumer later, 8:30 Eastern time, so 1 hour and about 10 minutes away. We'll get new data on jobless claims. Look out for that. Under surveillance this morning, the rematch begins.
Everybody knows he's a liar.
But you
I just
agree-
want to
Hey,
make
Joe,
sure.
you're the liar.
Take a look at what he's actually done. He's done very little.
You could never have done the job that we did. You don't have it in your blood.
I don't understand why this president is unwilling to take on Putin.
There has been nobody tougher to Russia. Between the sanctions, nobody tougher than me on Russia.
He talks about the art of the deal. China's perfected the art of the steal. We have a higher deficit with China now than we did before.
We built the greatest economy in history.
We handed him a booming economy. He blew it.
We've done this before and we're about to do it again. President Biden and Donald Trump returning to the debate stage for the first time in 4 years tonight at 9 p.m. Eastern on CNN. The candidates agreeing to shake up the rules this time around with no live audience, no notes, and microphones muted after their turns are over. Henrietta Trace of Vader Partners joins us now for more. Henrietta, what are you looking for out of this very early debate in 2024?
At this point, I'm hoping that people will genuinely watch it and it won't just be sort of a viral clip that goes live on TikTok. Although I suspect that the people who are going to be swayed by this, according to the latest data from Morning Consult last night, are actually the ones that are younger voters, specifically Black voters and Hispanic voters, who are saying, I'm going to watch this debate just to find out who I'm going to vote for. They're the largest undecided basket right now. And my attention is on how they feel after the election, the hours after, as clips go viral, if they do.
Henry, YouGov had similar polling. 1 in 5 voters planning to watch are actually watching to decide who they're going to vote for, and they're younger. So what does each candidate need to say to the Gen Zs out there?
That's the only question that I think really matters, Anne-Marie. The undecided voters right now are going to decide this election. Polls are off by about 9 points versus where they'll land in November. That doesn't mean they're wrong. It means that the polls are telling you about a big basket of undecideds and third-party voters who are not going to stay there. Those are disproportionately female voters who are plus 17 for Biden right now, and they are double the number of undecided male voters out in the ether. They are disproportionately younger voters. They are Black voters and Hispanic voters, and they are low education voters. And these are folks who are going to be deciding based off of what happens tonight and into September. The biggest issue that Biden has is his age with this demographic. So him performing well tonight, the way that he did at the State of the Union, could have a material impact on the polling data in the next few weeks as the people who get off the shelf and decide how they're going to vote are predisposed to be in the Democratic basket. That's where we spend our time and what we concentrate on with our clients.
Well, the last 24 hours, we had a poll from Quinnipiac, we had a New York Times Siena poll, and Biden is down in both of them. But you've done a lot of data about how the polling is off, by how much. What are you inferring from these latest polling numbers?
Well, I think an outlier poll, as the New York Times write-up itself suggests, is really important to watch, but also important to put in context. It's not good news for Biden. Indeed, there really hasn't been much in the way of good news for Biden, except for the fact that Trump remains at his ceiling. His supporters are locked in and will not be deviating. It's Biden, though, since November of last year, who's been on the slow uptick, and that's from a whole bunch of things. Democrats coming home to Biden, believing that he really will be the nominee. I spend a lot of time with clients talking about who would replace Biden on the ticket. I mean, really smart people talking about it in every single meeting. You really can't avoid it. So any indications that Biden can do tonight to dispel the narrative that is being spewed by the Republican Party that he is not able to do the job for the next 4 years, I think would go a really long way, because that's where the resistance is. We were talking about immigration before. I mean, immigration's down 40% just since the president enacted his executive order 3 weeks ago. That's lower than it was when he took office. So the issue that Republicans have had a lot of salience around of immigration has been muted with the electorate and is now on par with abortion. You're going to go onto a debate stage in an environment like this where the Gen Z vote is the one that's up for grabs. You should talk about abortion all day, every day.
Are we going to hear anything, Henrietta, about policy? I mean, is that really going to be even relevant to this debate?
I sincerely doubt it. I really would be surprised. I'm sure there'll be conversations about things like the economy. There'll be taglines. President Biden has a plan for extending most of the 2017 tax cuts. Former President Trump has a plan that would extend all of them. The cost is $4.6 trillion. They're going to sort of hide the ugly parts and talk about how they're going to provide tax cuts for the middle class, or in Trump's case, all classes. And I think that's probably the most extent you'll get out of real policy discussion.
There's one thing I have tons of conviction about later on this evening, 9 p.m. Eastern Time, Bramo's not watching. Henrietta Trey's of Vader Partners. Henrietta, thank you. Lisa's not tuning in for this. Jay Pawlowski will be. Jay just wrote in, just wanted to clarify something quickly. He said he thought rates would back up in either scenario, but much more on a Trump win. Much more on a Trump win versus, say, a Biden win. But ultimately, shares the view, blue sweep, red sweep, you're going to see it sell off in the Treasury market.
Which is the reason why he's entirely out of the Treasury market and going into other non-U.S. assets at the same time that he's not completely exiting certain trades in the U.S.
This conversation is going to continue. In just a moment, we'll catch up with the Deputy Assistant to the President. We'll speak to Amos Hochstein on tensions in the Middle East and the risk to the energy market. That conversation just around the corner. Live from New York, this is Bloomberg.
Of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Equities negative here by 0.2% on the S&P 500. On the Nasdaq, a little bit softer as well. We're down by 0.2. Similar move on a Russell. Plenty of movers out there. We've talked about Micron already this morning. That stock is down by about 6% in the pre-market. Lots of talk in the last 30 minutes as well about Walgreens. Softer story there. That stock is down in early trading. Lisa, we're down by more than 10% in pre-market trading.
Wall Street Journal reporting that Walgreens plans to close a significant share of its 8,600 stores in the United States. This comes after it already announced last year a turnaround plan. They came out with a much lower than expected forecast range for full year adjusted earnings. And they said, we continue to face a difficult operating environment, including persistent pressures on the U.S. consumer and the impact of recent marketplace dynamics, which have eroded pharmacy margins. Also, I'm wondering how much some of the anti-theft measures have made it difficult for people to want to go.
Yeah, I was going to say, when they talk about specific dynamics, are they just talking about theft?
Well, I mean, it's not just the theft itself, too, right? It's not just that idea, but also the fact that the experience of going into these stores and you see the plastic covers and you've got to get someone to come over and unlock it. Why not just order on Amazon?
Down by more than 11% in the pre-market right now. Is this just about Walgreens, or is this really just about the US consumer? We'll get more data on the US consumer later. 1 hour away, jobless claims. Under surveillance this morning, top story for you, the CNN presidential debate starting at 9 p.m. Eastern tonight. It will be the earliest US presidential debate in history. President Joe Biden and former President Donald Trump facing off without a studio audience, and microphones will be muted unless it is the candidate's turn to speak. Elsewhere, the country's biggest banks passing the Federal Reserve stress test. Investors hoping the results will pave the way for higher dividends and stock buybacks, each firm staying above minimum capital requirements during a hypothetical recession. Interesting sort of takeaway from JP Morgan. Did you see that response? Basically saying that our expectations weren't as great as yours?
That basically it was less stringent what they did than their own stress test, basically posturing. It was a bit of chest pounding, saying you wanted to stress us, we stress ourselves even more, so take that, regulators.
Yeah, I'm not sure what that actually says about the regulators and the stress test to begin with, but okay. That's the latest on that front. Here's the latest on this one. Israel's Prime Minister, Benjamin Netanyahu, warning the country's military may shift its attention to Hezbollah in Lebanon, risking a wider conflict in the region. US officials maintaining ironclad support for Israel while looking to de-escalate tensions in an area crucial for trade and energy supplies. The Deputy Assistant to the President, Amos Hochstein, joins us around the table here in New York. Amos, good morning to you. It's great to see you.
Good to see you, too.
I know you have the president's ear. You've been a key voice in the Middle East conflict as well, particularly through the Gaza Strip, and now it involves Lebanon. And I know you've been part of those discussions too. Can we start there? How connected are the two issues, the tension we see in Gaza and the tension potentially on the horizon with Lebanon?
Well, first, thank you for having me. It's great to be back. Look, on October 7th, after the horrific attack by Hamas, Hezbollah decided to enter the conflict on October 8th that night with an attack on Israel. Israel responded, and we've been in this low to mid-range conflict ever since of a back and forth of attacks between rocket attacks. It has resulted in a significant amount of Israelis being essentially evacuated from their homes in the north, not being able to go back there because of the fire from Hezbollah, and a equal number of Lebanese who are now evacuated from their homes in South Lebanon. So this has been a terrible low-range conflict, and while the attention has all been in Gaza for a very good reason, this has been on a simmer. So clearly we have been trying to work hard with both parties to keep it at that level from escalating into a sort of larger conflict and a more intense conflict. We've been able to do that with some escalation periods and then bringing it back down a little bit. We're going to continue to try to do two things. One is to de-escalate the current conditions and then find a solution that will enable people to go back to their homes. That's the charge.
What do you think that solution looks like? What are both sides asking for?
Well, at the end of the day, we have to get Hezbollah away from the border because the status quo of October 6th is not possible anymore. So we have to take, there are a number of measures that we've been discussing with both sides that can be taken by both sides in order to be able to bring that calm back. I can't go into the details of what that would look like, but I do believe that it is possible. Now, Hezbollah has said that they are attaching their actions to what happens in Gaza. We understand that. That's the reality. And we have to work within those parameters to see what we can do as things shift. And of course, we are working very hard. The president has been working nonstop to try to get a ceasefire that allows all the hostages to come home and that would practically end this war in Gaza. That, of course, would make things a lot easier to reach a settlement. But it's not an automatic. It's not you get a ceasefire in Gaza and you get a ceasefire in Lebanon. It doesn't work that way. We have to have its own solution in Lebanon, but it is enabled considerably by a ceasefire in Gaza.
When it comes to Lebanon, the concern everyone has is what this means for the wider region, more so than what's happening in Gaza. Lloyd Austin yesterday, the defense secretary, said it could easily become a regional war with terrible consequences for the Middle East. Is that something this administration is really worried about, a regional war?
Well, I think we are worried and concerned about any escalation of violence between Israel and Lebanon, and these are conflicts that you know how they start and you don't know how they end. The most important piece right now is the effort to get the hostages back from Gaza and a ceasefire that ends the conflict over time. That is how we prevent both the current conditions and the escalation that you're referring to.
A big vulnerability for a wider regional conflict is, of course, the Red Sea. Even this morning, there's reports that a ship traveling through the Red Sea was attacked by Houthis. When you look at, you have this big portfolio of not just what's going on national security-wise in the Middle East, but the energy market. How concerned are you about a spike in energy prices because of what we're seeing in the Gulf?
Well, look, I think the Houthis, who are a proxy of Iran, have been attacking the international commercial fleets. There's really no apparent reason why we're accepting the fact that the Houthis, backed by Iran, can fire missiles into the Red Sea and affecting global shipping rates, global shipping routes, and the availability of ships themselves. So that is something that we are going to continue to do what we can to bring a stop to that. As far as the energy markets, look, I think that clearly the Middle East is one of the most important energy regions, and we have to make sure that there is a free supply of energy. That has been done. There are other routes that can avoid the Red Sea, and clearly we've seen a supply non-disrupted, even if it ticks up the price of shipping rates a little bit by the fact that they have to go a longer route. But by and large, that has not affected the energy markets.
There's one story as well circulating about, you mentioned Iran, about sanctions when it comes to this administration, how tough they're being on their adversaries when it comes to energy sanctions. Many people will say there's sanctions on the books, but they're not always enforced. And there seems to be some tension between the White House and people at OFAC who are enforcing those sanctions about how, because it's an election year, this is some of the reporting the Wall Street Journal has, because it's an election year, the administration's not going to be as tough on, say, Russia or Iran because they want to keep prices low. Would you say that's accurate?
No, that is completely false. Look, we have been as tough as can be on both Russia, Iran, when it comes to a broad range of sanctions, not just energy sanctions, but including energy. Now, when you do energy sanctions, or any sanctions for that matter, you got to be smart about it. You don't want to do sanctions. When you do the sanctions, you want to make sure that the bad actor is the one that is affected. So if you do the kinds of sanctions that cause a major spike in price, what does that do? It just increases the revenues to the regime that you're trying to affect. So you have to, this is not about putting down a hammer. You gotta do this in a smart way that reduces their revenues. That's the ultimate goal here, is to reduce their revenues. Now, is there an alignment between the fact that we would like to see domestically in the United States lower prices? The president has said many times he'd like to see lower gasoline prices for consumers at home, at the pump, so we want to prevent a spike in energy prices. But there's a total alignment between what we want on the domestic side to reduce prices, which we have done. Gasoline prices are down about 20 cents over the last couple of months, and our national security goals, because when prices rise, they don't only affect American consumers, they also increase revenues to the bad regimes we're trying to affect.
So you talk about gasoline prices. Right now I'm looking at just under $3.50 a gallon on an average basis around the United States. That's down from a high of more than $5 back in June of 2022. And the average over the past 5 years is north of $3. So is this an appropriate price where it is right now?
No, we'd like to see it significantly lower than this. But we have a growing economy. We have a conflict in Russia. We have a conflict in the Middle East. And that's why the president has pursued a policy of doing two things at the same time. One is to make sure that we have enough production in the United States and that the energy markets are supplied. Second is to accelerate the energy transition. And we've done both. The passage of the IRA, the BUILD Act, the CHIPS Act is all about investing into the future. But he recognizes that you can't do that as a flip of a switch. And that's why, look, the United States today is at the highest level of energy production that we've ever had. So he has done everything he can to make sure that we are at maximum supplies to reduce prices and inflation, while making sure we have a pathway to not having this dependence on oil producers either at home or from adversarial countries.
How much will the Strategic Petroleum Reserve act as a buffer, potentially, with additional releases in the next couple of months in response to prices not going down on their own?
Well, look, I think the SPR is a critical tool for the United States. We've used it over the decades to address emergencies and conflicts and natural disasters. The president had an unprecedented use of the SPR with the release of over 180 million barrels because of the Russian conflict, when prices soared to over $120 a barrel and $5 of gasoline, as you said. And we will continue to use any tools we have if there is a need for it. We are going into hurricane season. We have a conflicts around the world. We have to make sure we have that tool. Since releasing from the SPR, the Department of Energy has been buying back. And as a reminder for this show, for our audience of Bloomberg, we sold at about $95. We sold 180 million barrels at about $95. We're buying it back at about 77, 78. That's a really damn good trade.
So you're a good trader for the West Wing, noted. But it's not just the $5 a gallon when the SPR came into effect. The first time the Biden administration tapped the SPR was November 23rd, 2021, and gasoline was at $3.39. Today it's at $3.50. So why not tap it today?
Well, we were at that point in time, first of all, it was a very small release. And it was coordinated. And it was coordinated together with our European allies, European and Asian allies. So it was a global action that we took. And that was around the run-up for this war. I mean, people forget that the President of the United States saw this war coming in Russia and called it in advance. So it's about the surrounding environment of what is happening in the markets, what's generating the increase in price. We would like to see the prices go down. We've called on the oil companies to address that. They're producing more than they ever have, both in the United States and around the world. And I think they can do a little bit more to make sure that Americans are not suffering at the pump, and that the effects on inflation are reduced.
Can I just say you haven't closed that trade yet? You've got to refill the SPR first.
We are refilling.
You're like doing it, but haven't done it. Where are we now relative to where we were? It's quite a gap, isn't it?
I disagree. We've purchased back about 40 million barrels. We were required by Congress to sell 140 million, which we worked with Congress to cancel that sale. So net, we are basically back to where we would have been had we not sold from the SPR. So, but we take that point. We have enough in the SPR to address the concerns that we may face in the future. That is something that every American should know. We have enough to address any security or natural disaster. We will continue to buy those barrels back to refill the SPR because the president believes that it's an important tool.
You said we're doing two things simultaneously. You said one is we're making sure we're fully supplied when it comes to energy. Two is to accelerate the transition. I'd argue you're doing three. You're also putting up the walls to China and Chinese EVs. Can you help me square that circle? Why shouldn't American consumers be able to buy cheap Chinese EVs and to ensure they can do the kind of things that you're talking about doing anyway?
Well, what we want to make sure is that we have energy security and economic security. And so those are always challenges that you have to look at. We'd like to see a lot of lower prices. We put sanctions on Russia and Iran because that's the right national security call. The way that the Chinese have acted in the market, it is not a free market. And we have to make sure that we are securing the American economy for the future. And if you allow somebody to come into your market, flood it with below-cost products, then ultimately you'll lose your economy. And we've seen it with product after product. And I think people who watch this show who care about financial markets should be very worried about that and look around the world. Every place they've gone in, they've done the same thing. They dump on the market. They eliminate the local competition and the local markets. Look what happened in the solar industry 15 years ago. And then they dominate. And those prices are not going to stay low forever, just until they kick you out. And then they're going to raise those prices. So if you want to have a strong American economy, we have to take the kind of strong action the president has been taking.
There is, though, a conflict here. And to John's point, if people could get much cheaper electric vehicles, the transition might happen faster. That the fact that they are more expensive and that it might be a slower transition. How much more do you expect the United States to depend on fossil fuels? How much longer as a result to prolong the transition in the name of national security?
It's not just about national security. I don't want to have a boom in EVs that is also on the backs of slave labor, child labor, coal power plants that are energizing a EV car manufacturing. We want to have a transition to a green economy, a clean economy that actually has the standards and the values of the United States. There's a livable wage that workers should have. Hiring children and certain minority communities just because you can and pay them nothing and then say, I have a cheap product. That's not what we're going to build the clean energy economy on. I think the innovation is in the United States. We have the workers and the skills in the United States, and we should build as much as we can. And the fact is that our partners agree. If you look at what we're discussing in the G7, that is what everybody wants. They want to be able to have a clean economy that is competitive, and that we should have this around the world. Countries should have their own manufacturing bases, but they should be done based on a free economy. What the Chinese are doing is not a free economy. It is based on loans, 0% loans from the central bank that says, and we have company CEOs coming out, whether it's in chips, in AI, or in EVs, who say, I don't plan to make a profit for several years. Well, you don't take a genius to say, here's a wad of cash, go build a business, don't worry about a return. I think what you discuss around this table every day is getting returns. That's not a free market. So yes, we want to have a clean energy economy. We're going to accelerate it by doing it in a fair way that produces more jobs. And look, manufacturing is back in America. And that's because we have these infusion of the laws that we passed, again, the IRA, the Inflation Reduction Act, as well as the BUILD Act and the CHIPS Act. That is how you do it, making it competitive and better.
It's been too long. Need to do this again soon.
Anytime.
It's good to see you. Thank you, sir. Amos Hochstein there, the Deputy Assistant to the President. Equity futures right now just about unchanged, but there's a big story in the pre-market. It's Walgreens. We're down by close to 15%. Let's get you some of the stories elsewhere with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Yeah, so 14.5% for the drop in Walgreens this morning, John. The company lowered its earning outlook for the rest of the year, and doing so pointed to worse than expected consumer environment. It also plans to close more stores in the U.S. According to the Journal, Walgreens is reviewing about a quarter of its stores that aren't profitable and could shut a, quote, meaningful percent of them in the next few years. On the other side of things, Amazon has joined an elite group of companies. The tech giant has reached a $2 trillion market valuation for the first time in trading yesterday. The AI rally has pushed the company deeper into record territory. Even so, Goldman data out this morning suggests that hedge funds are selling tech aggressively. June's net selling of the sector is on track to be the largest on record, with the bank's data going back to 2017. Now, another Boeing whistleblower has come forward. It's a subcontractor mechanic who worked on the 787 Dreamliner and claims that he was retaliated against for raising concerns about work that he saw on the plane. According to a statement through attorneys, the whistleblower said that he saw, quote, substandard manufacturing and maintenance practices on a crucial part of the jet's nose for maintaining cabin pressure. Boeing responded, saying the claims were reported and investigated, and it is not involved in the personnel decisions of subcontractors. And that's your brief, John.
Danny, thank you. Up next on the program, looking beyond big tech.
Because of maybe the AI narrative in particular, we've seen people perceive certain boats as lifeboats when in fact they got holes in them. The boat that's tilting back and forth, the people who are running to different sides of the boat can actually remain fairly stable.
I think I understood that from Mike Wilson of Morgan Stanley.
You can explain it for the next 5 minutes.
Start with you guys yesterday. Yeah. You can explain the commercial break to me. All right, that's next on the program. You're watching Bloomberg Surveillance.
We invest in, buy, and own the backbone of the global economy. When the water gets delivered to your house, the road you drive on, the pipeline that brings different things to your community, the telecom towers that transmit your phone, the data center, the real estate that you live in. It's what we own and build. So it's really what drives the economy, and you don't often see our name.
Is that a good or a bad thing?
You know, it's just because we're behind the scenes, but it's big, with $1 trillion of assets almost. We're behind a lot of the things of the global economy.
So being low-key, do you think it gives you strength?
We just try to be quiet and do our thing, and sometimes it helps and sometimes it doesn't. But I'd say on balance, it's been good for us.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people,
This is a political attack, and we must hold our elected officials accountable.
the transactions,
Really a record-breaking moment.
Bitcoin is the exit strategy.
and the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. In a multi-trillion-dollar industry, there's a lot of ground to cover.
Bitcoin ETFs rubbing elbows with the big dogs.
This frenzy has engulfed the entire world.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg.
No drama here. We're down about 0.1% on the benchmark on the S&P 500, just a little bit softer. Under surveillance this morning, looking beyond big tech.
Because of maybe the AI narrative in particular, we've seen people perceive certain boats as lifeboats when in fact they got holes in them. The boat that's tilting back and forth, if people are running to different sides of the boat can actually remain fairly stable. It's not just the Mag 7, by the way, that's high quality growth. There are some really good high quality growth stocks outside of tech and comm services that have been performing well.
Here's the latest disappointing earnings forecast for chipmaker Micron weighing on NVIDIA and the AI-fueled rally. Joanne Feeney of Advisors Capital Management looking beyond the big tech, writing this. The anticipation of lower interest rates and better earnings prospects appear to have driven the market higher. The build-out of artificial intelligence infrastructure by the likes of Microsoft and others are a big part of that, but the increase in earnings growth occurred across sectors beyond technology. Joanne joins us now for more. Joanne, I want to go to one name straight away, and it's in retail, and thanks for being with us, by the way. I want to go to Walgreens, and the pre-market getting absolutely hammered. We're down by something like 15%, down by 14.81% right now. And this is what they're saying. New range for the year. Cut that big time, 280 to 295. They had seen 320 to 335. Lisa's been talking about the reports of store closures as well. Joanne, we're trying to work out if this is a sign of what's happening with the broader consumer, or is this just a sign of a retailer struggling before its own reasons?
Yeah, John, I think it's Walgreens having its own issues. And the reason for that is Walgreens had adopted a business model of trying to build clinics in their locations to, help add a new business line, drive more traffic, to help the retail side. We had owned Walgreens for a while. We sold it last year because one of the things we noticed in the wake of COVID was the shortage of skilled medical staff, whether it's physician's assistants, nurse practitioners. And so we expected that it was going to be really hard for Walgreens to be able to staff such a new line of business locations. And then you saw the pharmacy workers themselves going on strike. So it was going to be made pretty clear to us this is going to be a challenging business model. And so we're not surprised. We sold it last year, and we just think it's going to continue to be challenged.
We're seeing CVS shares down in sympathy, so this isn't just a Walgreens story, at least when it comes to the market. How much is this just simply because of the medical side of things and what you're talking about with respect to shortages? And how much does this speak to the changes also post-pandemic with some of these stores to prevent theft, with the fact that basically Amazon had an upper hand and this just turbocharged it?
Yeah, your comments earlier, Lisa, about the frustration you have anybody has going into one of these shops and trying to buy whatever. It's just, it removes that convenience that those shops were supposed to afford. And that is a real problem. And they might need to be more judicious in where they deploy such theft prevention devices. I mean, we're here in suburban New Jersey. I don't think there's a lot of that kind of theft going on. I don't know. But, I walk into my local Walgreens or CVS and have to get through those barriers. It's a pain in the neck. So I think they need to really rethink the cost of this to their traffic.
So, Joanne, Walgreens aside, how do I want to get exposure right now to the consumer? What's the best play?
Well, right now, the consumer remains strong. And we've all been hearing about the demise of the consumer for a couple of years now. It just hasn't happened. And the reason is because basically people are employed. People are employed and nominal wages are going up. But That said, we have seen weakening in the labor market, right? We are seeing those high interest rates translate to higher costs of buying a car and rental costs being high. So parts of the consumer spectrum are really challenged right now. So one of the places we like is to go where the consumer goes to save money, and that's a place like TJ Maxx. And so that's one that's a core holding for us. We think that's going to be a good place to be. But then also look at housing. You know, there are shortages that are going to persist for a long time, and playing shortages as an investor is actually probably a pretty good bet. And so looking at a Lennar or a Williams-Sonoma, which is also tied to that new house trade. And the first-time buyers are still out there. They can't find a place to live, and companies like Lennar are offering them ways to take down the costs of buying that new house.
I can tell you some hands were going up around the studio as you were talking. Joanne, thank you. Joanne Feeney there of Advisors Capital Management. Much more on the consumer later on this morning. 8:30 Eastern Time. Jobless claims, that's just around the corner. The estimate in our survey, 235. The previous read, 238. Coming up in the next hour, we'll catch up with Tony Rodriguez of Nuveen, Bloomberg's Mandeep Singh and David Gura, and Ed Hyman of Evercore. Looking ahead to all that data 34 minutes away. The third hour of Bloomberg Surveillance, up next.
The top names in global leadership are on Bloomberg.
The ultimate goal of doing away with the central bank still stands. The discussion regarding the central bank is primarily moral in nature. The way we see it, there has been a cultural change in Argentina. Today, wages are miserable, not through our own fault. That is due to 20 years of populism. Argentines have understood that populism is no solution, and that the quick fixes they sold to them during the last 100 years, both the criminal politicians and criminal economists, they were all false. And we need to opt for a pure orthodox market-based solution. And that's what's going to make us succeed. And that's what's underway. In fact, there are already indicators today that show that activity in the agriculture sector, in the oil and gas sector, in mining, well, our economy is recovering strongly in those departments. There are indicators that point to the fact that Argentina could really make a strong comeback.
Nobody covers the top global leaders like Bloomberg Television and Radio. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
It's an incredibly fun job, for sure.
We're in the business of leading beyond the numbers.
To me, teamwork is key. You need to identify opportunities and push people.
It's not about how to say no, it's about how to say yes.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
Today's CFO has to be much, much more than a bookkeeper. I talk more about culture today than I talk about numbers.
It's not just about debits and credits and digits and dollar signs.
It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the Chief Future Officers of some of the world's most influential companies. New episodes this summer, only on Bloomberg. Brought to you by Workday. fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything.
When we look at this soft landing scenario, we're very positive as we go into the second half of the year.
We still have the view that the Fed will be able to cut this year, 2 cuts likely this year.
The Fed's waiting because growth is strong. That's not a bad thing for the markets.
In this complex environment, the patient approach that the Fed is delivering is the right one.
Weaker economy, better inflation news. The Fed cuts. Stronger economy, not so good inflation news. The Fed stays on hold. And the reality is the data has been pretty mixed.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
The third hour of Bloomberg Surveillance begins right now, live from New York City this morning. Good morning, good morning. 90 minutes away from the opening bell with equity futures doing okay. No drama. If you want some drama, pick out this name. It's Walgreens in the pre-market, down by 14%. Double-digit declines, slashing the outlook for the year ahead, and a talk of some mass store closures, Lisa, to follow.
In the Wall Street Journal, reporting that Walgreens is planning to close a, quote, significant share of their 8,600 stores in the United States, saying they continue to face a difficult environment. Two things, we were talking about challenges with hiring for that key healthcare push. And then there's a question of just how convenient are these convenience stores in an inconvenient way, in an inconvenient moment of preventing theft.
So there's two threads to this story, potentially. We could have a conversation about the consumer and talk about jobless claims, which drop in about 28 minutes' time. Or we could talk about theft and link that to a debate that's going to take place a little bit later on this evening at 9 p.m. Eastern Time in Atlanta, Georgia. And that's going to come up repeatedly, you'd imagine, in this election campaign over the next 5 or 6 months.
What Trump is just going to try to hammer home this evening is he's going to ask this question: are you better now than you were 4 years ago? Do you think that, one, things are more expensive? Do you feel like you're making more money and you have a better ability to pay for things? And two, do you feel safer? This is going to be something major that the Trump campaign wants to hammer home. I really loved what Henrietta Trey said, though, how important it is going to be for these individuals to speak to the youth, the Gen Z, these individuals that maybe they're first-time voters, they haven't made up their mind, but are they going to sit there and watch 90 minutes, or are they going to wait for the clips to be circulated on TikTok? And that's why the style of this debate is as important as the substance.
You know, I think it's interesting that we can't even really put the right narrative on this story because it could be many different things. Walgreens wants to blame the consumer weakness in a challenging consumer environment. We're talking about some pretty secular trends that might have to also do with how penalized some of these retail theft rings have been. There is a broader question, though, about cherry picking. And yesterday, Neil Dutta accused me of cherry picking data. We all are cherry picking anecdotes and data.
I thought you were friends again. What's happened here?
Well, you know,
they're not friends. You missed it.
Well, I mean, you know, he just basically is saying the Fed should get on with it. We don't have to rehash the whole thing. We can do that later. Go ahead. Well, you can watch it back. But the issue is, how do you get a clear narrative at a time where it's not just me? A lot of people are cherry picking because what other aspects do you have to pick from right now?
It felt very much like, to Neil Dutta, Lisa was kind of like, you can't sit with us. You're not part of the table. But when it comes to the, well, it did yesterday.
Like
John missed it. A little bit like Mean Girls. We're all wearing pink, so it was pretty appropriate.
Hold on. He could have come to the studio. We absolutely welcome him. Neil, please come to the studio. We would love to have you back. Carry on, Anne-Marie.
Well, when it comes to the cherry picking, what I thought was so interesting as well from a prior guest talking about Walgreens is potentially these stores need to care more about the foot traffic than the theft. How many times have you maybe gone into a Walgreens, really needed something like a deodorant quickly, and you're waiting for the attendant to come, and then you're just like, I'm cutting my losses, I'm going to be late for my train, I'm going to be late for the dinner I'm going to, and you move on.
Tell us more, Anne-Marie.
No, but then you move on, and how actually the theft issue is becoming more important to a place like Walgreens.
I just want to know what happened to this show in my absence. Try and figure that out after the program. Let's get to jobless claims. Jobless claims about 25 minutes away. The data looks like this in our survey, 235,000. That's the estimate. The previous number, 238. That's the big number for you a little bit later this morning. Equity futures going into that negative by 0.2% on the S&P. Yield just unchanged on a 10-year at 432.74. And euro dollar in and around 107 all morning, 106.97 now. Positive by 0.15% on that currency pair. Coming up this hour, we'll catch up with Nuveen's Tony Rodriguez looking ahead to November after tonight's presidential debate. Mandeep Singh of Bloomberg Intelligence as Micron fails to meet some lofty expectations. And Evercore's Ed Hyman weighing in on the US economy and that economic data that drops this hour. We begin with our top story, the mother of all debates. Nuvine's Tony Rodriguez saying this: the debate is likely immaterial to the investment outlook. The election, however, has the potential to be material. A single-party sweep would lead to the greatest potential for volatility. Either winner will face significant fiscal and geopolitical challenges. Tony is with us around the table. Tony, good morning to you.
Good morning.
Let's get into that, what that wave, blue or red, could mean to this Treasury market.
Sure, and I think that, historically when you look at it, obviously the markets really do like gridlock, and that's what you have when you have some split government. So a sweep to us, given that right now you can't really look at either party and say that there's any fiscal responsibility that exists in Washington, D.C. So really the prospects of maybe further fiscal blowout type of policy is a big risk for the markets. And when you think about tariff policy as well, again, right now there are some parameters that people are held within because of split government. To the extent you get a sweep, you have the ability to suddenly implement some what would be considered pretty significant tariff differences from where we are today. That can be inflationary, it can hurt global growth, it'll have implications on the FX side. So we think the volatility will be high if you get that kind of sweep. Probably obviously the least volatility would come from a continuation of where we are today. We have policies that have been in place for 4 years, that continues. I think the markets basically can get some comfort out of that. Any big shift though, look out.
Does the American bond market speak French?
It might, but there is a difference, a big difference.
You know what I'm getting to here,
I do know what you're
ultimately.
getting into, absolutely. So we don't think we're going to go in that direction that quickly, but we could get there eventually, because right now there's no prospect for the deficits to come down. So when that moment happens, like you might argue it just did with France, is we think down the road, but it's something to be careful about for sure.
Je parle français, and I want to talk about the auctions, because that actually is going to matter if the U.S. can look like the French market, considering the fact that no one has come on here and said that the fiscal backdrop for the United States is responsible in any measure. We do have an auction today of 7-year notes. Are you still buying, even though you have this trepidation that there could be that moment where suddenly the bond market pushes back?
Yeah, so it actually doesn't matter if I am buying, because there are plenty of buyers. So we've had 2s, 3s, 5s, 10s, 20s, 30s, tips all this month. Only one of those auctions had a tail to it. So there's a lot of demand. Some of that is around flight to safety, because there are some uncertainties out there around monetary policy, fiscal policies. You've seen these election results in India, for example, that surprised the market, in Mexico that surprised the market. So the dollar has a lot of demand for it. We look a lot at, for example, dollar yen and what Japanese investors are doing with their dollars. When you look historically, the insurance companies in Japan, for example, typically hedge like 2/3 of their US dollar bond holdings. They're only hedging under 45% now. So again, high cost of hedging, dollars trending. There's a lot of pockets of demand for both the dollar and for U.S. Treasuries as a result.
Okay, so you went there, and we've had basically Alan Ruskin's swan song of his 4-decade career. He's talking about how it's a dollar-strong market for the foreseeable future. And then we had Jay Pulaski saying the dollar is going to crash, especially if Donald Trump gets elected. He's getting out of Treasuries altogether. He's expecting weak dollar. Where do you stand on this?
So we do think that the dollar is going to remain strong over the balance of this year, because right now you look at where policy is set up. And at the start of the year, we were thinking whatever, the market was pricing 6, 7, 8 cuts. The BOJ would be aggressive with tightening. Neither of those has happened. The BOJ is having some difficulty being hawkish enough for the markets. The Fed is trying to be somewhat dovish, but it's clearly not as dovish as it had been. That's all pro-dollar. And at the same time, the U.S. economy is outperforming. So we don't see that changing dramatically. We do think the U.S. economy growth will moderate. Inflation is going to remain sticky. So that's still kind of a very slow, patient Fed. That's supportive of the dollar. The underlying growth rates of macroeconomies, the U.S. is still going to perform and behave pretty well. So that's a pretty positive dollar story. But we do think the dollar is overbought. So the 1-year outlook would be for a weaker dollar than we are now. It would be for the yen to strengthen a bit. The yen at these levels that are, 40 years, when he started his career, that's what it was at this level last. We don't think that's sustainable in the long term.
But do you hold this view regardless of who wins the election?
Well, again, if you get the sweep, and particularly from the tariff side, So if you get kind of a sweep that ends up implementing some of these talked about policies of, 10% tariffs across the board or 50 plus, 60 plus with China, that's going to be dollar positive because A, it's a little bit inflationary for the U.S., so the Fed's not going to be able to respond with cuts at all. And B, it is really a kind of tax on global trade, slow down to global growth, which means flight to safety, flight to the dollar. So in that case, that'll prolong, we think, the dollar strength.
Given how material the consequences could be from this election in November, and given that we're talking about very fine margins in just a handful of states, how do you put together a view on 2025, sitting here in the middle of 2024?
Yeah. So I think one of the main things about it is that you can't have tremendously high conviction in your view. So you have to position with some caution. We talk about being right now around the middle, maybe slightly higher of our risk budget. And part of that is because you want to have powder dry to be able to respond and react to whatever may come from either the election or some other geopolitical event or some repricing in the markets because it's a French, Liz Truss type of moment, whatever that might be. But really, that's how you do it. You kind of lay out your plan, invest somewhat more cautiously than you otherwise would because the uncertainty is pretty high.
Just detail that a little bit more. So that means sort of a little bit of cash, and then when you are willing to take risk, where are you taking those pockets of risk at the moment?
Yeah, so from a duration perspective, it's kind of neutral, maybe a little bit long. We think rates will be a little bit range-bound, moving lower, but vary by a limited amount over the balance of the year. From a credit risk perspective, it's really about we're comfortable with credit risk at the higher quality segments of the market. So if you look at high yield, leveraged loans, CLOs, emerging markets, we don't want to go into the deepest end of the risk pool. Triple Cs, low single Bs, those are the companies that are being hurt by these higher rates, which we think will be in place for longer. So that their balance sheets, their income statements are getting hurt the most. But when you look at the higher quality double B side of the market, there you can find companies that are going to be pretty resilient through what we think is a moderating growth environment, but not a recessionary environment.
So are you preparing investors for a clipping coupon type of environment where essentially they're getting 5, maybe 6% returns and nothing more? Because to shoot for higher means potentially losing your shirt.
Yeah, we think you can shoot for a little bit higher. So we would say 5 to 7% is a place where you want to build portfolios to achieve that kind of target yield. When you start talking about achieving a 9% or more, now we think you're taking on probably risks that are a little bit unwise at the moment. So 5 to 7%, which means that cash is competitive for the moment, but the minute we get that first cut, the second cut from the Fed later this year, early next, all of a sudden that comes along with a little bit of a decline in longer term rates. You're going to see these portfolios that are non-cash yielding 6%, 7%, generating returns that are in that 6 to 8% area, and that's a pretty significant outperformance to cash, and probably competitive with equities, even though we're up 15% on the year. Seems like that always happens. We're underestimating the equity market, but it should be competitive with what you get in non-fixed income asset classes as well.
Spoken like a true bond manager. Tony, thank you. Tony Rodriguez of Nuveen. Tony, appreciate it. Thank you, sir. Equities right now on the S&P, negative by 0.1%. Let's give an update on stories elsewhere this morning with your Bloomberg Brief. Here's Danny Berger. Hey, Danny.
Hey, John. Jefferies out with results after the bell yesterday, and profits soared. Second quarter investment banking revenue jumped 59%. Debt underwriting more than doubled. It is a sharp shift from the dull deal activity of earlier this year and last over geopolitical concerns and high rates. Jefferies President Brian Friedman said that a broader recovery in capital markets activity and M&A is underway. Elon Musk's SpaceX will sell insider shares in a tender offer at a higher than expected price. The shares will sell for $112 apiece, valuing the company at close to $210 billion. That's $30 billion more from its valuation in December. A source says that the jump in value is owed to a significant investor demand. The valuation is also a new record for an American private company. Now, when it comes to the McPlant, U.S. consumers aren't loving it. McDonald's U.S. chief said yesterday that the plant-based burger was not a success in the test markets of San Francisco and Dallas, saying that customers aren't looking to McDonald's for a plant-based protein in the States. The company has said that plant-based food had fared better in European markets. Instead of place-based options, McDonald's is investing in its chicken offerings stateside. And that's your Bloomberg Brief. John.
Danny, thank you. Thank you very much. It's official. People don't want the plant-based burger at McDonald's. Because why would you go to McDonald's for that anyway?
I mean, honestly, it's not even that much healthier when you look at a lot of things.
The sodium?
Yeah, you look at the sodium, you look at the saturated fat, you start wondering what's the appealing. You're at McDonald's. It's not like you're going to be really going full vegan.
It's TK, full vegan.
Oh, really?
Yeah, seriously.
At McDonald's?
I told you. Yeah, McDonald's.
Is this new?
Yeah.
It's fairly new, last few months.
Full vegan
you're
in
actually
life
kidding.
or full vegan when he goes to McDonald's?
No, full vegan for life.
You're
I
joking,
don't believe
right?
it.
No, we've
But he's
had
still
a long,
drinking martinis.
We had a long chat over breakfast with martinis a few weeks ago, and he told me that he's gone full vegan.
Yeah, liquid diet.
Yeah, with alcohol still. Baby steps, Bramo. Baby steps. Up next, the morning calls. Mandeep Singh on Micron's disappointing AI miss. That conversation just around the corner. You're watching Bloomberg Surveillance.
On the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg. Context changes everything.
Just getting tons of messages now about TK going vegan.
It's not true.
No, TK and I will do a segment about this at a later date.
Oh, yeah?
Right, serious conversation.
On a cruise boat.
Yeah, absolutely.
With a martini and
All
some
right.
steak frites.
Hey, watch this space. Equities right now in the S&P, negative by 0.1%. In the bond market, unchanged, 432.94 on a US 10-year. Lots to talk about with one particular name. Let's get to the morning calls with one stock in focus, Micron. First up, Citi recently lifting its price target to 175. The analyst now saying to buy shares on post-earnings weakness and expecting better results through next year. Stock is down by close to 6%. Next up, KeyBank raising its price target to 160, maintaining an overweight rating. The firm highlighting the company's stronger than expected third quarter results and noting fourth quarter guidance falling in line. And finally, UBS lowering its price target on the chip maker to 153, keeping a buy rating. The firm citing tepid guidance, but ultimately sees it as noise, expecting gross margin to move higher through 2025. So what is it? News or noise? Mandeep Singh of Bloomberg Intelligence is with us around the table. Mandeep, is it noise or is it news? What's your view?
I mean, there were some clear data points around AI, and when you look at Micron, it's coming out of a trough. Compare that to NVIDIA that has seen that AI tailwind for the past 5 quarters. So memory, we know, is needed for AI as the model get bigger, and that's what, you know, they guided to. They said HBM revenue, the one correlated to AI, was $100 million this quarter. It's going to be multi-billions next year. So they have a lot of visibility to the AI side. The one other thing that Micron plays in is on the on-device side. It's the DRAM for your smartphone. So if there is a wave in terms of refreshes, Apple Intelligence taking off, that's when you will see real upside. And I think they pointed to non-AI piece being sort of tepid, hence the stock reaction. I don't think it was any sort of kind of reflection on AI being weak. Like, they're sold out for the next 5 quarters. I mean, that tells you something, how much order book they have in terms of this AI wave.
It raises, though, this issue of how much the market's gotten ahead of itself with projecting a lot of gains tied to artificial intelligence that just take longer than the market is expecting. How much is that a takeaway? Even if you're bullish on the story, there is a feeling that markets have gotten ahead of themselves, that every AI-related stock is another NVIDIA just dressed down in disguise.
So I look at the stack, and when I look at Micron, it's like TSMC. Albeit the difference is TSMC is a monopoly, memory is an oligopoly. So Micron is one of the 3 vendors. But every data center provider who is making a chip for AI needs a memory chip. They need TSMC to fabricate the GPU, but they also need Micron to give the memory. So they have that nice tailwind where everyone, whether it's a hyperscaler or NVIDIA has that competitive threat that hyperscalers start making their own chip. But they both are going to Micron and TSMC for memory and for fabricating the chip. So I think it's a very nice place to be in because of this massive AI investment that's going on. Yes, it's going to be slow to monetize. That's what we are not seeing on the software side. But the AI investment is real. It's happening, and it's going to continue for the next probably 18 months or 24 months.
Mandeep, I'm glad you brought up the AI investment, because 2 months ago exactly, the President of the United States actually went to Micron, was talking about unveiling billions of dollars from the Chips and Science Act. He might talk about that today as one of their big policy goals that they had and were able to see through. Where are we in terms of the Chips and Science money going to places like Micron that are supposed to be building these fabs? So the United States can make sure they're secure from places like what's going on in Taiwan.
Yeah, and that's where my oligopoly comment probably suggests that Micron is like a monopoly here in the US, because if you're not sourcing from outside, you go to Micron. And look, they guided to CapEx going up 60% next year. I mean, a lot of investors are freaking out. What does it do to the free cash flow? But remember, Micron is getting the handouts from the government to invest in these fabs. So that kind of offsets that CapEx increase that they're making. And so from that positioning, I think Micron is in a great position. And obviously, it's a cyclical industry. And you want to get it early in the cycle. As I said, it's coming out of a trough. Whereas, you know, NVIDIA is probably 5-6 quarters into it. So that early cycle is very important here.
One aspect of the earnings that I thought was interesting is they have a shortage of parts to meet the demand. They don't have the supplies. And they talked about potentially raising prices as a result because it is in such demand. How much are we underestimating just how much prices have to go up? How inflationary this ultimately has to be because of the rush to AI and the lack of capacity to meet the demand?
Yeah, I mean, what happened in the last cycle when every memory maker was cutting back on their CapEx was capacity increase almost flatlined. There was no capacity increase on the memory side for the past, I would say, 6 quarters. So now that they're coming out, they're talking about ramping up CapEx, but by the time the capacity comes online, it'll be another 6 to 7 quarters. So that's where the supply-demand dynamics work in their favor because the market is still, supply constrained. As is the case with NVIDIA, the market is supply constrained. That's why you see the ASP increases. And you're going to see a similar dynamic play out on the memory side because HBM demand is more than the supply. And you cannot create a fab overnight, even if the government is handing you money.
You've alluded to this. You brought up Apple and the prospect of a big smartphone upgrade wave. We've got a decent idea of what that smartphone's going to look like later this year.
I mean, look, they said their Apple Intelligence is compatible with iPhone 15, and it's not backward compatible. Okay. So you need at least 8 gigabytes of RAM. It cannot be less than that. And so the content of memory will double for sure because the iPhone 16 will have 16 gigabytes of RAM or more because that's the only way you're going to be able to run on-device AI. And the one thing with on-device AI, it's good for memory makers, it's good for TSMC, it's not so good for NVIDIA because NVIDIA is all about running things in the data center. So if you're doing things on-device, that's not so good for NVIDIA.
So are you telling me that there will be enough packed into this phone to get the people that may or may not be still walking around with iPhone 10s to upgrade?
I mean, look, at the end, it's apps for Apple. If you're able to show apps that can leverage this on-device, capabilities when it comes to the chips and the memory they are powering, then I think people will want to upgrade, because there is a lot of promise with generative AI. It's just a function of how these companies are able to roll out new functionality and monetize it. I mean, there's no free lunch here in terms of, keep investing and there's no revenue to show.
Mandeep Singh of Bloomberg Intelligence. Mandeep, thank you. On the latest with Micron down in the pre-market by 5% and looking ahead to potentially a big upgrade wave later this year.
Not, though, for one person who's sitting at this table who is still skeptical.
It depends. Look,
Well,
if the thing
he has
breaks,
like one app running on his phone,
I'll
so
say
what
this
does he
about
really
the phone.
need a new phone for?
Let me say something positive about Apple.
Wow.
Okay.
Who this?
They created a product that runs so well and lasts so long that I haven't needed to upgrade it for years.
Unless you get some sort of slowdown in the battery and then you have to update.
They get more aggressive pushing that one, then maybe I have to upgrade again.
Oh, so basically, are you pushing them
The
to slow down?
ecosystem's so sticky,
It's
that
true.
you're sort of trapped there,
Yeah,
aren't you?
you have to be addicted.
I found my own BlackBerry the other day. I was thinking of bringing it back.
Firing it back up, doing it back up, getting ready to go. We're getting ready for this. Jobless claims coming up next, 4 minutes away. Ed Hyman of Evercore to react from New York. This is Bloomberg.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Equity futures right now negative by 0.1%, 60 minutes away from the open and bound. We're down 0.2 on the Nasdaq 100. In just a moment, we'll get a ton of data for you, including another read on first quarter GDP and jobless claims. All eyes on jobless claims from my perspective, just to see if that breakout over the last couple of weeks sticks or even breaks out even more. The estimate in our survey, 235. The previous read, 238. If we switch up the board just briefly, the bond market going into this data, the 2-year looks like this, 474.72, totally unchanged. With the data, here's Mike McKee. Hey, Mike.
I wish, John, I had news for you on the jobless claims front, but it's basically unchanged at 233,000. Continuing claims, 1,839,000. That's up from the previously reported 1,828, although we'll see what the revisions are. GDP comes in on the forecast, 1.4%, up 0.1. Personal consumption did not move. It goes down, actually, 1.5% from 2%. The forecast was for 2%, a little bit odd. Durable goods orders up 0.1%, and the capital goods orders, non-defense ex-air, which is what everybody cares about in the economics profession, down 0.6%. The forecast was for a 0.1% gain, so that's going to be a little bit worrying to those who are considering what second quarter GDP will be. These are May numbers for durable goods. The initial jobless claims revisions, 239,000, so it's a drop of 6,000, but doesn't really get us out of this range that we were in. And continuing claims revised down to 1,821,000, so that's an increase of 18,000 there, which is not a huge amount considering we're talking 1.8 million. So overall, there isn't much to say about these numbers. Core price PCE Q over Q, 3.7%, up from 3.6%. That was forecast by analysts who noted that since the first quarter, we have seen some revisions to the numbers, and so this probably doesn't have any forecasting ability for tomorrow's PCE number.
So if you were a Fed official and asked you, if you took the last 3 months, are you seeing concrete signs of economic slowdown, an economic slowdown right now, would you say we're seeing one?
I'd say we're seeing one. The issue is, how bad of a slowdown is it? Does it slow down the way the Fed expects, what the Fed is trying to do, or does it fall off a cliff? And so far, it doesn't seem to be falling off a cliff. I do want you to give us some praise here for waiting on all of these numbers till you got back.
Thank you, sir. Thank you.
Well, I am wondering.
Thanks for doing the schedule that way. I appreciate it.
Well, we tried to accommodate the vacation schedule. There was a heated discussion yesterday about cherry-picking data. And the person who was talking about this was Neil Dutta, and he said, really, there are two things that matter, and that's the unemployment numbers and what we're seeing with inflation. And for the Federal Reserve, they're seeing unemployment go up, and they're seeing inflation come down. So why not just get on with it and cut rates? Why is it not just that simple?
They want to be sure what they're seeing is going to continue and isn't a one-off or a 2-month off kind of thing. They need convincing. They need to know that the trend is going to continue. And we have seen trends go back and forth since the pandemic in ways that we never saw before. The one thing that's always interesting, though, is everybody says the Fed is data dependent and they criticize them for that, but they forget the Fed is not just looking backwards. They're always talking to CEOs. They are always talking to small business owners, and they have many surveys that all of the presidents in the various banks put out to see what's happening right now. So they're a little bit better informed than people give them credit for.
Mike, when you talk about just the consumer appetite and some of these companies and what they say, tomorrow we do get personal income as well as personal spending at a time when we did get a downside revision to personal consumption in the first quarter the latest read. There was a story out on the terminal this morning saying that excess savings in the United States reached $2.1 trillion in 2021 as a result of some of the pandemic-era programs. That has completely evaporated as of several months ago, and now it's gone negative. How much does that sort of speak to a softness that we're expecting to see but haven't seen to the degree many people have been talking about?
Well, the Fed is as stumped as everybody about why lags have been longer in this economic cycle, and there are a lot of different theories, and there's probably a lot of different things that have caused this, but it finally seems to be hitting the economy. It doesn't seem to be crashing the economy. Doesn't seem to be the kind of thing where everybody's going to all of a sudden pull back. And of course, recessions are psychological events because people start to worry and then they pull back their spending. Businesses do the same. And we haven't seen that yet. And that's what the Fed is, on the one hand, keeping an eye out for, which is why employment's come back in as a major indicator for them, because they want to make sure that all of a sudden people aren't getting laid off, scares the Americans, they stop spending, et cetera.
Mike, stay close. Bonds reacting to this just a little bit. Yields dropping across the curve by a basis point or two. We're down 1 on the 2-year to about 473, on a 10-year down to about 432. With us around the table, one of the very best, Evercore's Ed Hyman, joins us in person. Ed, good morning to you, sir.
Good morning, John. How are you?
Fantastic and brilliant to see you. I want to pick up on what Lisa was talking about with Neil Dutta in the last 24 hours. If unemployment's starting to climb, if inflation's falling, why won't the Fed just get on with it?
Well, they will. You got to be patient. And people like Mike pretty much put me out of business. The quality of...
I couldn't do that.
Well, the quality of what you do seriously is so good. But the Fed's just being patient, and you can't fault them for that. I can feel, and I have a strong view about what's happening, but I can feel that they're not making a mistake by being patient right now, waiting. I'm not for sure whether it's an unemployment claims number or another increase in the unemployment rate by 1/10, or some anecdotal, like swimming pool sales weekend or something, that suddenly say, yeah, we have to go. The thing, Mike, that we should keep in mind is that they do have a view that once they start, this is a march. They don't take a step. Once they start, they are telling you and me that they're going to have a program of rate cuts. So that's why they have a little more resistance to starting up.
It's controversial to say that they're not making a mistake by being patient. There is a growing school of thought, and frankly, a fissure in a growing number of analysts, where some people say, actually, this is the tipping point. And we heard Mary Daly address this just on the margins. We're seeing a tipping point in the labor market in particular, and we're not going to be able to address it until it's too late unless you get ahead of it. What do you make of those arguments?
So I'm very sympathetic to them. I'm very sympathetic to it. So I'm not in the everything's great and, they should... But I thought what she did was very important. And that's why, John, the claims numbers are so critical. You get another increase or two, and suddenly you say, we're going there. But I think I have almost perfect knowledge of the economy today. Don't hit me. But it's not falling off a cliff, like Mike says. I talked to a couple of friends of mine this morning in Atlanta because of the debate coming up. And Atlanta, they say it's a little bit cooler. Atlanta is a real estate-based place. I don't know if you know real estate. And it's cooled off a little bit. But we do a set of surveys of companies, which is, of CEOs, if you will, very systematic. And it was 60, 0 to 100. Now it's 50. And it was up a point last week to 50. It's not 45, which is recession-like. But I think your point is well taken. They could, be criticized for not acting a little bit more. But I can see where they want to, look over there and see around the corner, get one more data point or two more data points. But I thought the daily comments were important.
When you say you have a very good sense of where the economy is right now, I want to dig into that, because we've been talking about how difficult it is to get sort of a consistent story from all of the anecdotes that tell very different tales, depending on the socioeconomic bracket in particular. How much more fragile is the strength that we're seeing, given that it is hinged entirely to the top tier of income providers, of income earners in this country, and you are seeing real signs of softening anywhere, either in the middle or lower income brackets?
So, again, we survey about 200 companies a week. The same companies, the same person at the company. We found if we switched people, the results would go up and down on the same company for just a week. And it varies. We cover all socioeconomic strata. For example, we have a survey of wine and spirit wholesalers, And of those people, we ask them about whether they're trading up or down in terms of quality. And we do a survey of shopping guide companies. When you go to a supermarket and you get a little free flyer, this is definitely low-income shoppers. And on balance, it's okay. And there's some places that are just booming. I mean, it just sort of pins your ears back. It's so strong. But it is at the top. And so the economy is overall, and housing starts a little bit that way. The small builders are having a tough time, and the big national builders are doing much better because they can finance their own building and help the client buy a place. So it's very, but I'm not right now, I'm not stressed out that I'm missing it, which sometimes I am stressed out, but it definitely is, upstairs, downstairs.
Ed, you mentioned you were calling some people in Atlanta because of the debate.
Yeah.
So obviously, I want to ask you about if you think the Fed, I want to put this together, if you think the Fed is going to be on a marching cycle to the downside, how do they plan for 2025 to potentially cut rates when we can get more inflation depending on the policy of who's going to be in the White House?
Well, that's the, talk to Lisa. That's the issue. I have a strong view that the monetary tightening has been significant. We have rates, quantitative tightening, inverted yield curve, money supply slowed dramatically. So it's not just one thing, and that's my overarching view of what's happening. And so when I get a strong data point, I say, well, it's just an outlier. Doesn't fit with my view anyway. And when I get a soft data point, I think that's part of the trend. And so to get to your point, I really don't think inflation is going to pick back up. I think that it's slowing. It's going to keep slowing. See, like on the core PCE comes out tomorrow. It was 5.5, and it's going to be something like 2.5. So to a pretty good extent, I try and establish what the trend is. Sometimes you can, sometimes you can't. But it seems to me like the trend in inflation is slowing. It has some bumps early in the year, but on balance, it's still slowing. So I really don't think it's going to pick back up. But the Fed has to worry about that some.
But can you ignore politics?
It's not my wheelhouse.
But the political economy is where a lot of policy is being made.
Yeah.
Tariffs, immigration, all of this is potentially going to affect the real economy.
Right. So, again, my North Star is that monetary tightening is the dominant force. And so, for example, life is, in economics, is always more complicated than what I view it to be. So, for example, if they put on tariffs, then as you've reported here, frankly, the dollar goes up, and that negates, some of the inflationary impact. But I don't like it at all, and that is an inflation risk, and we'll find out a little bit more tonight, where that goes. But my team, who covers the topic we're discussing, does not believe that either candidate will have a knockout punch. I'm still going to watch it.
Can we pick up on your North Star, just to wrap it up? The tightness of monetary policy. How tight do you think monetary policy is right now, and how do you gauge that?
I'll let you know in a year. So, like I mentioned, yield curve's been inverted. It's now been inverted for like 450 days. I mean, maybe Mike's counting, but who's counting? I mean, it's the most ever, and it's by a fair amount. We're just getting into where it's longer than average impact, but not a lot. I mean, I think the community's been too aggressive. But anyway, the yield curve is one. I'm probably older than anybody else you have on your show, but this is my 13th inversion. They've all, or 7th inversion. They've all led to a recession. And then you have the money supply, and I buy the Milton Friedman. It was 30%. Now it's like 2%, and that's a second aspect. And then they've done quantitative tightening. And the San Francisco Fed, actually come to think of it, where Mary Daly is, they haven't had a new estimate, but their latest estimate of 3 weeks ago had the proxy funds rate adjusted for QT at 6.25%. And 6.25%, I mean, that inflation is not 6.25%. It maybe it's 5.25% or 4.25%, but it's not. And so, however I look at it, I think monetary tightening. But people are tired of this. I can tell my team, when you have this thing, Mike, but sometimes you have a view and you say it over and over again.
Yeah.
People go like,
Never. No, I'm kidding all the time.
Can I ask, are they pushing back? When you say your team, is that because they're of a certain age? Are they in their early 30s and they think that maybe that they say it's different this time and you say, no, I've seen this movie before? What does that interaction look like on the floor?
No, it's not that so much because, my team is the intergalactic investment community. I talk to people constantly, and not many, but I have a number of them that are older than I am and sharper. But I think about that as whether or not I'm over the hill.
Well, I don't think you are, Ed, and hopefully we don't wait another 12 months to do this. I'd like to do it again soon.
My pleasure.
Thank you, sir. Always appreciate your time. One of the very best, Ed Hyman of Evercore. Let's give you an update on stories elsewhere this morning with your Bloomberg Brief. It's Danny Berger. Hey, Danny.
Hey, John, just a quick recap on the data we got moments ago. U.S. jobless claims came in shy of estimates at 233,000. The expectation was for 235,000. Continuing claims, though, rose to the highest level since the end of 2021, suggesting that it is taking unemployed people longer to find a job. We're going to get the next big read on the U.S. economy tomorrow with the core PCE deflator, the Fed's preferred inflation gauge. A quick check on shares of Walgreens in the pre-market, falling nearly 19%. The company lowered its earnings outlook for the rest of the year, pointing to a worse than expected consumer environment. It also plans to close more stores in the U.S. According to the Journal, Walgreens is reviewing about a quarter of its stores that aren't profitable and could shut a, quote, meaningful percent of them in the next few years. Nike reports earnings after the closing bell today. The stock is down year-to-date on lagging sales, consumers were spending less, and rising competition from the likes of Adidas, On, and Hoka. Analysts expect Nike sales grew at just 1% for the full year. That would be its worst results in more than 2 decades if you exclude the GFC in the first year of the pandemic. Nike also announced that it was cutting 2% of its workforce earlier this year, and those layoffs take effect tomorrow. And that's your Bloomberg Brief. John.
Danny, thank you. Appreciate this morning. Up next on the program, setting you up for the day ahead, including the mother of all debates. You're watching Bloomberg Surveillance.
The top names in tech are on Bloomberg.
I don't like anthropomorphizing AI. I sort of believe it's a tool. It is got intelligence, if you want to give it that as moniker, but it's not the same intelligence that I have.
I especially am afraid of whenever it's some kind of AI is speaking for me. I want to be myself, and I want to be the one speaking. I have AI myself. Yeah. Actual intelligence.
This industry of producing intelligence is one of the greatest opportunities I've ever seen. Instead of instruction-driven computing, it's now intention-driven computing.
There's been a lot of us who've been working in AI for a long time. It's great now to see other people using it and seeing what some of the challenges are.
To stay ahead in tech, it has to be much more than just software. So you need long-term investments in science and research.
You have an ecosystem of companies coming together. It's causing a new industrial revolution.
Nobody covers technology like Bloomberg. Context changes everything. From the world of politics to the world of business. Every weekday on Bloomberg TV and radio, hosts Joe Matthew and Keely Lines deliver news, insight, and analysis from and about politics' biggest power players.
The president has been clear that is non-negotiable.
I mean, this is going to be an ugly, ugly year.
Balance of Power, live around the world every weekday, only on Bloomberg Television and Radio. Context changes everything.
40 minutes away from the opening bell with equity futures negative, just 0.1%. Here's your trading diary for the next 24 hours. Nike reporting earnings after the closing bell this afternoon. Tomorrow, we'll get the PCE deflator, personal income and spending numbers. Unmatched sentiment coming up as well, plus more Fed speak from Embark and Bowman and Daly. That's all after tonight's CNN presidential debate. It's Biden and Trump facing off at 9 p.m. Eastern Time. Right down there in Atlanta, Georgia, is Bloomberg's David Gura. David joins us now for more. David, it is June 27th. Why are we doing this on June 27th?
The sitting president really wants to reinforce his message to the American people early. We'll see if we get a second debate. There is one on the schedule for September, but you point out, John, rightly, this is earlier than we've had in past cycles. Usually we get through the two political conventions, and then we have the debates. That's one thing that's novel. Another is who's running this. You say it's the CNN presidential debate. We have a news network here calling most of the shots. Yes, the candidates have agreed to them, but in the last few cycles, we've had this bipartisan presidential debate commission that's structured the debate to its liking, not had commercial breaks. This is something else entirely. So we'll see sort of how this works, this new crucible in which this debate's going to take place.
David, there's a ton of different novel provisions in this debate that we haven't seen. There's no live audience. The mics are muted. How are the camps preparing for all of these, different kind of setting than they're really used to?
Yeah, it's a stark contrast. Of course, you've had President Biden at Camp David for these last few days, going through his policy points, doing mock debates in a movie theater there, really getting ready in a kind of traditional way for this debate. And then you have former President Trump, who has, we gather, just talked to policy experts here and there and has been out on the campaign trail delivering speeches. That's in keeping with what he did the last couple of times he's run for president. He's kind of eschewed traditional debate prep and wanted to see how the audience responds to what he's saying. But that gets us to the point that you raised, Anne-Marie, which is there is going to be no audience for this debate. And that's going to be kind of strange as well. We know, certainly with former President Trump, he's somebody who feeds off of fulminating in front of an audience. He wants to hear sort of how the audience responds. Not having that in this hall, effectively just doing this in a TV studio, is going to be radically different from what he's experienced before.
When you are looking at this debate, David, what do you think the one key point each of them needs to drive home?
I think that they have to articulate a vision for the future. So with former President Trump, he's obviously very keen to talk about his past tenure, what's happened since. Grievance politics is something that we've heard a lot of. The same thing is true of President Biden. I mean, he's focused a lot on his accomplishments over the last 4 years, but I think that those who are watching this debate for the first time, however few and far between there are who are undecided about what's going to happen when they go to the polls in November, I think what they want to know is what the vision is for the future for the next 4 years, and it's incumbent on both of these candidates kind of spell that out in a very clear way that's going to be sort of an effective mechanism to sway those undecided voters.
Do you really believe that, David? I mean, honestly, do you think that that's the case? Because
skepticism from Lisa.
I mean, come on. So many people have come on this show and they've said, it's going to be the tone. Do they sound energetic? Do they sound angry, or is it going to be jolly Trump? I mean, these are the things that people are looking for. Are you saying that actually you're going to be listening for policy?
Look, I will be, and I was cheered to hear Ed Hyman say that, despite the fact that his team doesn't think there'll be a knockout punch, I think there's wide consensus on that. There is interest.
Yeah, candidate. Such a blank slate given all of the uncertainty around policy. How much do people actually trade and change their views around this? I'm actually very curious about that, aside from just, who wore what better.
Special coverage coming up a little bit later. Bramo won't be watching, I will be. Many others will be too. Live on Bloomberg TV and Bloomberg Radio.
I think I'm the only one that's going to be
watching. Hang on a minute,
watching.
guys. Just let me complete a sentence. Come on. 8 p.m. Eastern Time. Now carry on. Continue abusing me for the next 30 seconds.
I was just going to say, I think I'm the only one around this table that's going to watch, so.
I'll stay up. I'll probably fall asleep.
Yeah.
I'll stay up and watch a little bit of it.
I mean, I would like the viewer to weigh in. Do you want to go hear at me tomorrow, or do you want me to watch the debate? I'll watch the clips afterwards.
I know you came back from your Euro holiday just for this debate.
I don't want to be in Italy anymore. This is where I want to be, right here, right now. In front of a TV screen, watching that debate a little bit later. Reaction tomorrow, PIMCO's Libby Cantrell, former World Bank President David Malpass, Mohammed Al-Aaron of Queen's College, Cambridge, and Apollo's Torsten Slok. An absolutely stacked program for you to get you to the weekend. Live from New York City, this is Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
We're operating in a very volatile environment. So JetBlue has a very large presence here in New York, and there are air traffic control challenges. And so we've had to overinvest in hiring excess crew members and building flexibility into our planning process. And so over time, we hope to wean some of those investments back as the operating environment around us stabilizes.
We made the decision early on that we were only going to invest internally on key differentiating technologies, and clearly the powertrain is the key differentiating technology. So our investment is a recurring investment with respect to the powertrain team, the battery team, which is part of it, the engine team, electric engine team, which is part of it. And we also have a lot of non-recurring costs with the other components because we're not developing those internally. We're using the existing aerospace defense supplier base for most of the other components.
We invest a lot in the offices, that you feel home, that you can actually be at your best yourself, and people work very differently. We take a lot of input from the sports world, actually, the athlete spirit, right? Building a sports team that can perform at the best, but also talking a lot about the explorer spirit. How can we really tap into new things, continue being disruptive? We have 80 different nationalities at On. It's very important to have a diverse team because we have a very diverse landscape of customers.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in. We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
This is Bloomberg.
From New York City, for our viewers worldwide, I'm Matt Miller. Markets today wondering if AI really is going to be a revolution or if it's going to happen later on. The countdown to the open starts right now. Coming up, Micron results, throwing some cold water on bullish AI bets. Hedge funds apparently aggressively cut back on tech. This according to the prime brokerage at Goldman Sachs. And debate night in Atlanta. President Biden and Donald Trump face off tonight to fight for America's vote. We begin, though, with the big issue, labor market data, raising hopes that the Fed may be able to cut rates this year.
We have a view that once they start, this is a march. They don't take a step. Once they start, they are telling you and me that they're going to have a program of rate cuts. So that's why they have a little more resistance to starting up.
Joining us now is Carol Schleif, BMO Family Office Chief Investment Officer. Carol, great to have you on the program. So much to talk about today. Let's start, though, with the Fed. You know, yesterday we saw the dollar rise to the highest level in 2024 on concern that the Fed may have to keep rates higher for longer in a divergence away from what's happening at the ECB and the BOE. Today, there's, again, a little more optimism, although that's based on a weaker labor market. What's your view?
Well, we definitely think the Fed should err on the side of they've already kept them higher for a lot longer than people expected, and let's start looking at some of that. You're starting to see some signs of weakness at the fringes in the labor market. It's still very healthy, but it's in a lot better balance. And we'd love to see the Fed go ahead and initiate that first cut. We don't necessarily think that then they have to cut at every single meeting after that, but they don't want to get behind the curve.
By the way, we've seen some amazingly, I guess, thin breadth, right? I mean, on Wednesday, on Tuesday, only 113 stocks gained, and that pushed the S&P to rise. Yesterday, I think it was 140 and change, and we had a gain in the S&P. Is the broadening out of, earnings and stock gains dependent on a Fed cut?
It's not dependent on a Fed cut. We actually think that broadening out we'll see the potential for that as we get earnings. We're a couple weeks away from having another earnings season. People forget how much easier the comparisons to last year are, so you should have some really good earnings coming through, and that hopefully will broaden out that rally. But for sustainability and durability, you really do need to see more participants.
All right, let's focus in on the economy right now. Bloomberg's Michael McKee standing by, Chief Economics and Policy Correspondent. We've had some data crossing in the last, let's say, 35 minutes. Mike, what did we see in terms of GDP, in terms of personal consumption? We're all focused on the consumer and the growth it provides.
Well, you mentioned the labor market. Let's start with that, because the jobless claims numbers out today don't really give the Fed a whole lot of information. They didn't change much, 233,000 down from 239,000. That leaves us in a range that we've been in for like 3-4 weeks now. The 4-week moving average, 236,000. Is that bad? Well, a year ago it was 253,000. So kind of hard to know. Durable goods orders came in a little weak. A lot of that was in equipment spending. Capital goods orders terrible. But this is a very volatile series, so we shall see. GDP revised up 1.4%, and it's kind of interesting because this durable goods orders is the opposite of GDP, in the sense that GDP consumer spending was down in GDP, but business spending was up.
Still not as good, by the way. The GDP revision still not back to the first take, right? Because
still not back to the first take. However, Atlanta Fed GDP now still has second quarter GDP rising at a fairly high rate. Jobless claims, as I mentioned, not particularly giving us a whole lot of information. Now, I'll pull it back to what you were just asking about in terms of earnings. Is this a situation where companies are afraid of recession, so they're going to start letting people go, or are we just trimming around the edges so that as inflation comes down and the economy slows a little bit, margins can stay high? That's one of the questions the Fed is going to be asking. And we're not going to find out a whole lot until we get further data, and there is a lot of data coming up. We have the PCE inflation numbers tomorrow, of course, which are really important. But if you thought you could have July off, forget about it. On Friday of next week, we get the jobs report. Jay Powell does Humphrey Hawkins' testimony on Tuesday, July 9th, and Wednesday, July 10th. The CPI comes out on July 11th. You're going to want to be around that week. And then on Monday, July 15th, Jay Powell goes to the Economic Club of Washington. So there is an awful lot of data ahead. And even if other Fed officials speak between now and then, it's the data and the chairman who are going to make the difference, I'm sure.
Yeah, absolutely paying attention to PCE and non-farm payrolls, but I'm glad someone else still calls it Humphrey Hawkins. I feel like I'm in good company.
We're old enough.
Mike
we can do that.
Thanks very much for that. Let's get back to Carol Schleif here from BMO. It's a focus on AI that I really wanted to lead with, although the Fed seems to be the other big factor in the market. So that question out of the way, what do you think about? Micron came out with a forecast that apparently disappointed, although it seems like it was pretty much in line with the average. What's your take?
It's really important to remember that artificial intelligence has been around for a lot longer than ChatGPT has, that companies have been building their use cases. It takes a while to implement new technologies, so we're spending heavily, and there's this potential that it's harder on margins in the beginning until everybody figures out how to use it, how they're going to deploy it throughout. But we definitely think it's a secular trend that has legs, and there's many different knock-on effects. It's going to impact basically every industry. It's arguably one of the biggest secular trends, and a confluence between that and the infrastructure build-out to support it and other technologies it's one of the biggest secular trends that we've seen, arguably, since we built out the interstates back in the 1950s and 60s and completely changed the composition of how we do business, because it will touch everything from healthcare to consumer services, business services, and the way we do it. But it takes a while for people to figure out how they're going to use it and how it's going to impact margins and employment and everything.
But Carol, in terms of, you know, investing right now, Micron came out last night with a fiscal fourth quarter sales forecast between $7.4 and $7.8 billion. The average analyst estimate was for 7.58, so a little bit less than the middle of that range, right? They came out with an EPS estimate of 108, and analysts were looking for 102. Do you have to knock the cover off the ball right now if you're an artificial intelligence related company?
It does seem like that's where we're at, that the expectations have been pushed so far, because they have been, you know, in the last few quarters, they have been knocking the cover off the ball. And so that expectation, when you just do okay or come in line, looks like not a beat.
In terms of the consumer, Walgreens was out with a disappointing consumer environment forecast or characterization, and the shares in the pre-market are down like almost a fifth, like absolutely decimated, more than. What's your view on the consumer? Because now I think everyone's pretty sure excess savings have been worked off. You know, consumer debt is definitely at an all-time high, and they continue to add, like everything they buy, certainly in the lower quintiles, is on plastic or borrowed.
Well, it's not absolutely everything, but as long as the consumer is employed, they should do okay. But it's definitely, the consumer themselves are not a monolith. As we've seen, there's an increasing fraying of those at the top still doing okay, and those in the middle and elsewhere really seeing the pressure. They're being very picky how they're spending. Some are still hopping planes to go see Taylor Swift overseas.
Good point.
You know, so there's some of the services spending that's still really strong. You've got movie releases that were out, especially family-oriented movie releases that are breaking box office records. So stuff's still happening, but they're being very discerning about how they're doing it, and they're definitely pushing back on those consumer companies, saying, don't be handing me any more price increases.
So it's that nuance that I think is important, right? I tend to think in black and white binary, but you know, when I see higher end consumers going to Walmart rather than you know, maybe upscale
and buying
Chico's.
House brands.
Exactly. They've already put in their pools, so they don't need to put in a pool anymore. They're not buying Winnebago RVs. The pandemic is definitely over, but you're still seeing them spend. I mean, luxury brands are still good investments.
Well, as long as you're seeing the labor market in balance, and we haven't got layoffs, people are concerned. They're not necessarily, you know, the quits rate isn't as high as it was a year or two ago, and so people are just saying, I'm going to stay in my sphere and stay in my zone and try to spend a little less than I earn.
One of the first Wall Street adages, one of the first Wall Street cliches I learned when I was an intern at Tucker Anthony 25 years ago: buy the rumor, sell the news. We're just around the corner from earnings season. Do you buy the rumor now? June is typically a bad month. July is typically a good month for stocks. Do you load up on risk a little bit heading into earnings season?
Not well. We tend to think longer term than that, and we wouldn't necessarily write off this earnings season. We actually think, similar to the last couple, that it'll come in a little stronger than expectations are going in. But it's going to be very discerning. Investors will be as discerning as consumers are, and they're going to do what you've seen. You're going to have to beat by a lot. You're going to have to do shareholder-oriented, friendly things like buybacks and dividend increases and stock splits and things like that. But they're going to take it on a case-by-case basis. So one could make the argument that it's a great market for active managers.
It's interesting because the last 15 years have not been, right?
Exactly,
I mean,
exactly.
All you had to do for the last decade and a half was buy an index fund, and you beat literally everyone else except for, I think, one, you know, PIMCO, asset allocation fund. That starts now, you think?
Well, it's definitely, I mean, one of the early adages I had in my career was summer doldrums, and I haven't seen those for a long time either. As we were referencing earlier, all the data that's coming in earnings that's coming, you're definitely going to want to be on your toes. And we definitely think people should stay invested.
Nowhere except for the VIX right? I thought it was interesting. I was looking at that Goldman Sachs story today. Their prime brokerage says hedge funds are selling tech stocks aggressively. You know, we look back and see the most tech selling from hedge funds since the data started. We started collecting the data in 2017. NVIDIA obviously has been, it wiped off $430 billion in market cap in like 3 trading sessions. It's insane that the VIX is still down below 12 and 13. Is that, where's that complacency coming from?
I think a piece of it is you've got a lot of different players in there trying to position themselves. You've also got the end of the quarter on tomorrow. So
window
you've
dressing.
got, so window dressing going on and hoping that you get a pullback so you can turn around and reestablish those positions going into there. So the complacency though in watching the VIX, you know, I've taught people over the years to watch VIX, but it really has had a lot less applicability, if you will, in recent days. And it's only at those really hyper turning points like March of 2020 or the Silicon Valley bank blow up last spring where all of a sudden everyone pays attention to VIX and then minds and focuses elsewhere.
Right, it's only important in times of trouble, not when the S&P is just steadily marching higher and higher and higher.
So it's not giving us much guidance. When the markets are trending, it's more important to keep focused on fundamentals and what's undergirding that uptrend and if it's sustainable.
All right, some good intel there, Carol. Thank you so much for joining us. I hope I can have you back. Carol Schleif there from BMO Family Office. Joining us now with a look at some of the individual stocks. Moving ahead of the opening bell, here's Abigail Doolittle. Abby?
Well, the big decliner of the day, of course, or the one that is getting a lot of notice. Let's take a look at the shares of Micron, because at this point they are down. They're off the lows, actually, down less than 5%. And this, of course, after they put up a solid beat of the quarter that was, but relative to the fiscal fourth quarter, the guide just a little bit disappointing. But to the point you were making earlier, Matt, the midpoint is basically being met. But because there are some analysts estimating $8 billion of revenue, and they're looking at 7.4 to a range of $7.8 billion. Some seeing that as a miss, especially for a stock up 67% year to date. Now, we do have some other big laggards on the day, starting off with the shares of International Paper. They are down after Suzano, the Brazilian company, is walking away from a possible, what had been a potential buy of International Paper, saying they reached their maximum buy price. They're not going any higher. International Paper, on the other hand, is saying they are still on track to buy DS Smith. Those shares down sharply. Also down significantly, Levi Strauss down 16.3%. Into today, up 40% year to date. They missed the revenue estimate just slightly. They're also leaving the fiscal year guide untouched, and apparently wholesale a little bit weak. Net investors not liking that on a stock up so much. The one that's really down at this point, though, Walgreens down 21%. Yeah, really pretty stunning there. An EPS miss of 7.4%. Revenues did beat, but they cut the outlook. Company pointing to consumer challenges. We'll be speaking more on that one on the open, Matt.
Yeah. Fascinating and massive drop, Abigail. I mean, losing a fifth of its value, at least in the pre-market. We'll see how it trades when the market's open, just 15 more minutes. Abigail Doolittle will be back with us later on the program. Coming up, Biden and Trump go head to head.
During the previous administration, my predecessor made promises which he broke more than kept.
Now under crooked Joe Biden, the world is in flames.
My predecessor failed the most basic presidential duty.
I just want to debate this guy.
We go live to Atlanta on what to expect from tonight's debate next. This is Bloomberg.
The names that move markets are on Bloomberg.
How worried are you about the U.S. election? It's for the American people to decide what they want with their politics, with their government, with their future. But obviously, we are all concerned about it because the United States is the largest economy, the largest defense country in the world and has been a beacon of democracy with all its upside and downside. We cannot interfere with their choice. It's their choice, and that's the beauty of democracy. But we have to be extremely attentive and anticipate, just as we do with inflation. You know, we do scenarios. What if, what if, what if? Then what do we do? Where I sit now in Frankfurt, head of the ECB, I think that we have to be strong as Europeans and not assume that we can rely on whoever our friends are around the world, because these things change over the course of time, as we have seen.
Bloomberg. Context changes everything.
During the previous administration, my predecessor made promises which he broke more than kept.
Now under crooked Joe Biden, the worst president in the history of our country, the world is in flames.
President, my predecessor, failed the most basic presidential duty.
He's not getting the job done for America. He is incompetent, ladies and gentlemen.
I'm a grown man running against a 6-year-old.
I just want to debate this guy.
After arguably years of finger pointing between the two candidates, President Biden and former President Trump are finally facing off, we think, as of now, in the flesh in the first debate of the 2024 election. Joining us now on the ground in Atlanta is Bloomberg's David Gura, host of the Big Take podcast. David, I guess the first question is, will Donald Trump actually show up and do this? And then we'll talk about what the debate topics are going to be.
The former president is in town, so it seems likely he is going to be on stage at that TV studio tonight. You know, he has in recent weeks, of course, cast a lot of doubt on the way that this debate is going to be structured, what the rules are going to be. I will note, Matt, he and his campaign agreed to all of the rules that have been laid out by CNN and agreed to by both campaigns. But he's in town. Yes, I think it's likely that he will be on stage with Joe Biden tonight.
Yeah, I mean, just last night in a barber shop, apparently, he was saying he hopes CNN gets bad ratings, which I don't understand because he's one of the stars of the program. Are they going to talk about substantive policy? Are there going to be serious discussions about taxes, about spending, immigration, abortion?
I think that we're going to see a valiant effort on the part of these two moderators, on Jake Tapper and Dana Bash's part, to try to get the candidates to address some of these issues. But it's hard to see through the questions about style to get to that substance. I think that's the main issue here. There's been a lot of talk about the age of these two candidates, how they're going to comport themselves, how they're going to interact when, as you say, they're in the flesh with one another on this stage. So I think that, by and large, is what most people are going to be watching this debate for. And then the degree to which we get some glimpse or clearer sense of what the different policy prescriptions are, that's some value add, but I don't think that it's going to be sort of what's driving viewership, certainly tonight when this debate takes place, Matt.
There have been times, for example, in the State of the Union speech, where President Biden has looked vigorous and strong. More often, however, he looks frail and has difficulty talking at a volume that everyone can hear. What does he have to do tonight to appeal to voters?
It's funny, the bar has been set low by the Trump campaign, and I think that that's a thing that the Biden campaign has really embraced. You mentioned that State of the Union address. It was a slam dunk, a home run, whatever sports metaphor you want to use for the sitting president, in that he did that with aplomb. I think it's interesting that the Trump campaign has sort of reevaluated how low they've placed that bar in recent days. I think because they realize he has been able to clear it in the past and is likely to do so. But this is novel territory here. You have a septuagenarian, a guy who's 78, running against a guy who's 81. These are both men of some advanced age. We'll see how sort of salient that issue of age is during the course of this debate, how much it comes up literally or how much it's just something that's read into. But it certainly is one of the backdrops to the conversation, the debate that's going to happen tonight.
You know, President Trump has bragged that he could shoot somebody on Fifth Avenue and, his supporters would still vote for him. We've in a sense, seen that, right? After he was convicted of multiple felonies, he raised more money than ever before. Does he have to behave tonight? Does it matter?
We have all become used to the way that he does behave as a politician, and I think that that's something that he's really going to exploit tonight. He's continued to exploit over the course of this campaign. You look at how these two candidates have prepped for this debate. Joe Biden has hunkered down at Camp David and done it in a very traditional manner. He's looked at briefing books. He's done mock debates. Donald Trump hasn't done that. He's sort of flouted that. So I think we're going to see a kind of continuation of that. There is this facet, this rule that the microphones can be muted by the moderators, and when you look back at the last two debates these candidates have had, there were all of these verbal interjections that took place. They're really kind of the signal moments, the things that we remember from those debates. Either they'll be inaudible tonight or difficult to hear if one microphone is silenced, but it's certainly going to change kind of the tenor of it.
That'll be fascinating. Also, I'm interested to know who Donald Trump will choose as his running mate. I thought we might get that announcement before the debate. I suppose there's still time, right? About 10 hours, I think. CNN has got a countdown clock running already.
Countdown clock, yes. They've teased this, and there will be a viewing party tonight that Kelly Loeffler, who is the former senator from Georgia, is hosting at her home in Georgia. And those four kind of front runners or finalists for that VP nomination are all going to be there. They're going to act as surrogates right after the debate, and then they'll be at that viewing party. So it is something that he has teased in recent days, that announcement could be coming sooner rather than later. I guess that's another thing that we'll have to wait and see if anything materializes on that front tonight as well, Matt.
David, very much looking forward to it. I'll be tuning in for your coverage tonight, live out of Atlanta. You, too, our dear viewer, can tune in to Bloomberg Television. You can listen to Bloomberg Radio for all the build-up and the post-game analysis, as well as simulcast coverage of the CNN presidential debate tonight at 8 p.m. Eastern. Coming up, they're counting down to that. We're counting down to the open. Just about 7 minutes to go. We're going to give you the morning calls from the big banks. And then later, Lee Farage, State Street Global Markets, head of multi-asset strategy, joins us to tell us why he's looking for fresh all-time highs in the S&P and the NASDAQ before the end of summer. This is Bloomberg.
Welcome to the world of decentralized finance.
With a surge in Bitcoin, you have crypto stocks also surging.
Bloomberg's covering all things crypto, the people.
This is a political attack, and we must hold our elected officials accountable.
The transactions.
Really a record-breaking moment.
Bitcoin is the exit strategy.
And the technology.
Awareness is going to grow, and these things grow the overall industry.
Crypto as an asset class is here to stay.
Bloomberg Crypto, only on Bloomberg. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything.
Time now for our morning calls. Look at some of the analyst recommendations on Wall Street this morning. First up is CIBC, raising BlackBerry to a sector outperform. That's right, that company still exists. It's a Canadian software security company now, reporting first quarter revenues that beat estimates. Next up, KBW is raising its recommendation on Bank of New York Mellon to outperform. KBW says the bank has firm control on its expenses and expects more profitability relative to peers. And then finally, JP Morgan is cutting its rating on U.S. Bancorp to a neutral in the wake of the annual Fed stress tests. The analyst, highlights the bank had among the highest loss rates for credit cards under the test scenario. So we'll see how that goes when we get the results. Coming up, Lee Farage, State Street Global Markets head of multi-asset strategy, on why he thinks areas of inflation could actually start to move higher.
Do you feel like this age of abundance over the last few years of just how much was being made?
For my personal taste, I am thrilled at what I get to find every night if I have time to look for something. So I personally don't think too much was made. I think the customer will tell us when there's too much made and they won't watch things. And I think part of the misalignment I talked about before is, imagine if things didn't get picked up or movies didn't get made that people didn't watch or go to see. That's how it used to be. The customer decided. I do think there's going to be less made in the middle price range. I think there's going to be more made in the higher price range, because when you get to global events like Barbie or Oppenheimer or Super Mario Brothers, it's worth the investment, and it's clear that the audience is there, and they just need to be given what they want. The middle, which ends up, quickly on one of the services in a way that we're watching movies that we don't know how they got made or when they got made and all of that. I think that will probably be curated better, and I hope there's more inexpensive things that give more people the chance to express themselves and have their work seen.
This is the countdown to the open. I'm Matt Miller. Moments away from the start of trading, investors are going to want to gauge whether the AI revolution starts now for companies other than NVIDIA or later, after Micron came out with maybe disappointing and a disappointing outlook. That's driven futures down, only off about 1/10 of 1%. NASDAQ futures down about 1/10 of 1%. There you hear the bells ringing. Webtoon on the NASDAQ, I guess cashing in on the kids' appetite for manga or anime. Not quite sure what it is. And then Grindr ringing the bell on the New York Stock Exchange. We know what they do. Let's check out some of the other asset classes that we're watching. Euro dollar right now, 107. So actually not taking such a huge hit from the snap election call that Macron gave us a couple of weeks ago. We've been down to 106. We were up at 108, and we're kind of hanging out right there in the middle. The 10-year at 429, so yields that were up yesterday coming down a little bit today, and crude that was down yesterday coming back up a little bit today at 81.62. One of the stocks that we're watching closely at the open is Walgreens down hard after reporting its latest results this morning. Bloomberg's Abigail Doolittle joins us to talk about what's going on with Walgreens Boots Alliance.
Well, Matt, relative to the stock, down more than 20%, heading to its worst day ever as a publicly traded company, going all the way back to 1980. That is the degree of selling pressure, and that stands out only because the stock is down 85% from its 2015 peak. So investors clearly not happy. Now, what happened was they missed earnings by about 7.4%. It is the guide, though, the guide disappointing for a second quarter in a row. They cut it below what was expected, and this comes after last year's announced $1 billion cost cuts, working to boost free cash flow. Clearly, it hasn't taken a hold yet, the turnaround plan, so I think that that's a big reason why shares are selling off so much. Now, they are talking about making more organizational changes, including store closures. It's not clear what the others are. They're not talking about how many stores. They are saying that those store closures will happen over the next 3 years. It's interesting because on the conference call for analysts and investors, the CEO, Wentworth, committed to investing in Boots prior to now. They had, of course, been talking about the possibility of spinning out that UK piece in an IPO or exiting the business in some other way. But now, again, the CEO committing to working more with that Boots. They're trying to move away, in addition, from the retail space. Their Village MD business outperformed. But the biggest thing, in some ways, on top of all of this, they talked about a worse, quote-unquote, worse than expected consumer. So tough going here for Walgreens Boots Alliance, down 19%, worst day ever, going back more than 30 years.
The consumer, Abigail, really in focus. We have a story out on the Bloomberg today pointing out that the $2 trillion in excess savings built up during the pandemic has been completely wiped out at this point, and credit card debt continues to go higher as interest rates stay high.
Yeah, that's not a good formula at all for people who have gone through that savings and are working through credit now in terms of excess money for whether the other day we were talking about pools and Winnebagos. That would be for the high-end consumer. But for the average American, if we don't have that spending power going into the economy, that's something to think about. About 2/3 of the economy, of course, is the consumer. So this data point here and that story on the terminal in terms of not having that savings and really having to move toward credit, something that I personally try to stay away from, but not always successfully, may again not be a good formula going forward.
Sometimes you got to find an extra couple $1,000s for those Taylor Swift tickets, right? And I guess they're going on plastic. Abigail, thanks very much for that. Levi's shares sink to a record, I should say, at the open as well. Bloomberg's Natalia Knijevic joins us for more. Did I get that right? They sink at the open to. It's the biggest drop that we've seen in Levi's.
They were down on pre-market by 18%. Now they're down by 15%. It's really interesting because sales missed just slightly. At the same time, EPS came above expectations. Maybe expectations for this earnings report were too high. The stock is up by 40% year to date. Last time when the company reported earnings, they increased guidance for EPS. This time around, they didn't change guidance, and wholesale business is down globally by 4%. And it represents about 40% of companies' revenue. Citi analysts are saying that this department, this type of business revenue segment is holding the company back. At the same time, direct-to-consumer sales are growing really quickly globally. They are up about 11%. What's really interesting is that Levi's products, only about 40% or less are for women, but this category is growing much faster than products for men. So women's department increased by 20% during the past quarter, but sales for men's products are up just by mid-single digits. And Matt, this is really important. Denim is a huge fashion trend for 2024, and not just jeans, it's top to bottom. And Levi's is saying that sales of those outfits—
Oh, the Jay Leno thing.
Exactly.
Denim shirt. And, you know, when I was a kid, Natalia, Levi's was kind of the only thing out there. I mean, if you're going to try and save money, maybe you would go with Lee or Wranglers if you're kind of on the farm. But for most people, it was 501s. And now there's so many other choices in that segment. It's so crowded.
Exactly. But I have to say, when I came to the U.S., the first purchase I've made was a pair of Levi's jeans.
Good for you. That's very American. Got some Levi's jeans, went to a Yankees game. Had some apple pie?
Not.
No?
That's my next goal.
Just the jeans. Okay, we'll take you to the game. Natalia Knijevic, thank you so much for that. Micron, really, I think the big earnings story, failing to live up to lofty expectations of at least some analysts, definitely of the AI big bulls in their latest report. Bloomberg's Isabel Lee joins us for more on Micron. Isabel?
Hey, Matt, it's really all about the lofty expectations. Day in and day out, investors are looking for that big payout. And Micron is one of those, the latest, that investors aren't really happy with. We have shares falling around 6%. The company reported fourth quarter sales to be around $7.4 billion to $7.8 billion. So this is well below analyst estimates. In fact, some analysts were expecting $8 billion. We have profits, though, slightly higher than expected. It's $1.08 a share versus the $1.02 estimate. So the thing is, yes, Micron is getting a boost from the whole AI mania we're seeing, but sales are still sluggish, especially when it comes to PC and their smartphones. So those are only beginning to see the recovery from last year's historic slump. So lots of eyes are on Micron. It is, after all, the largest U.S. maker of computer chips. But still, it has been one of the biggest beneficiaries of AI. It's up around 70% year to date. But this is just a fresh reminder, Matt, of how vulnerable this AI rally is. In fact, some are calling it to be a bubble because this comes just days after NVIDIA wiped out around $500 billion in market value. But we do have the CEO reiterating that 2024 will see a recovery and 2025 will see record sales. So you see that optimism still is there, Matt.
Yeah, a very interesting roller coaster ride to follow indeed. Isabel, thanks very much. Bloomberg's Isabel Lee talking to us about Micron and the AI craze that's given up the ghost a little bit in the past few trading sessions. Will that continue today? Joining us to talk about it is Lee Farage, State Street Global Markets Head of Multi-Asset Strategy. And Lee, of course, we're going to talk about a lot of other stuff as well, not just AI. But you can't ignore what some have called the most important stock in the world. That's NVIDIA. The others that, you know, have gained on the AI craze, hardware and software, data centers, energy producers. What do you think about all of this? Is it here to stay, or is it like the dot-com bubble where, you know, we're using the internet for sure, but the stocks are just overvalued and need to retrace some of their gains?
The difference between now and the dot-com bubble is the companies now, they're making money. If you think back to the dot-com era, those companies weren't making money. They didn't make money for years. The ones that survived are now very successful and very big companies. The ones we're talking about now with AI, they're making money, they're printing money every day. So there is a big difference. Look, valuations are stretched, we know that, but it's sort of, we don't know how big this thing can be. And until we do, then I think, you know, these stocks are going to find support. Whenever you get any dips, you're going to see buyers come in because the longer-term trend is still in favor of the AI revolution.
That's a good point. A lot of people have been saying, you know, investors were waiting for an entry, and if you know, loft off $430 billion from NVIDIA, that sure looks like one to me. Although we heard from Goldman Sachs that hedge funds were selling tech aggressively, retail investors were piling into the ETFs. Is it a little bit scary when the smart money is selling?
Depends which you define as the smart money.
I know.
It is, but I mean, I think, again, the valuation argument has become very strong for them in terms of, you know, this is overvalued. They've had a very good run. But as I say, there are still some very, very successful investors that are still buying these stocks, and I think will continue to buy. So I'm not that worried about it. Even if the stock market generally comes down, I think you're going to see these AI-related stocks still outperform. Demand for their product is pretty inelastic, even in an economic slowdown. Everyone wants to be in this market. So, you know, they've got huge cash piles, so higher for longer run rates. They're going to make money on their interest. So, you know, they're insulated from a large degree from the economy. So I think they're going to continue to outperform.
I was listening yesterday to Masters in Business, great podcast that Barry Ritholtz does. And last year he was talking to Tom Wagner about the early 2000s when telecoms were laying down fiber for like thousands of dollars on the mile. And eventually they sold that for pennies on the dollar, right? But thank goodness that capacity was there because the internet needed it. Is that what we're seeing now, you think, in memory or some of the other picks and shovels that are needed for AI?
In terms of putting the groundwork in for what we need? Yes,
Yeah.
I mean, I think that's exactly what we're seeing.
Paying way too much to put the groundwork in. Are investors, you know, a little bit exuberant here?
There will be pockets of exuberance. There will be companies that don't survive. There will be those that don't turn a profit to the degree that people expect. But then, you will have companies that the Amazons of this world and others that are hugely successful over the longer term. And it's a question, you're not going to pick all the winners.
Yep.
But you want to have a bunch of them so that if you get the winners, they're going to really offset anything you lose on, quite honestly.
Good point. We were talking about you coming on earlier and saying you think we're going to hit new records in the stock market, but you also think that inflation has some upside risk. Something we heard from Mickey Bowman as well a couple times in the past few days. How do you square that circle? I mean, if inflation has upside risk, doesn't that mean less likelihood of cuts and, more pain for the stock market?
It's a timing thing.
Yeah.
My call for fresh all-time highs is in the next month or two. So July and August, I think we're going to have a very quiet summer. We'll be interspersed with volatility around the French election or anything political here. But overall, what the Fed has done, they've told us they're not doing anything until September, right? So the July meeting is a dead rubber now. That's 3 months away. We have 3 rounds of data before then. The market's not going to be spooked by anything over the next month or so, I don't think. We have ample liquidity. We have investors who want to buy. That's going to mean, the drift higher in the market that we've seen for so long. There's no reason for it to come to an end over, during the course of July and probably August.
You're the second person on this program to call summer doldrums.
Yes.
And, I look at, there's a function on the Bloomberg SEAG, which is a seasonality chart, and I look at that for the S&P 500, and I see going over the last 10 years, the last 20 years, July is a great month for stocks.
Yeah.
Does that continue?
This month, I think it does, yeah. As I say, there's nothing to upset the positive mood around the Fed. We're not going to change our view on the Fed before we get to September, really. The market's going to sit between 1 cut, maybe 2. You're seeing very narrow ranges on 2-year yields. You're seeing very narrow ranges on 10 years. And that sort of stability in the rates market is great for stocks. So, yeah, I do think we're going to have a good July. Maybe not as good as some of the ones in the past, but I think...
It's been, I'm looking at the screen now. Yeah. Last year, we were up 3.1% in July. In 2022, 9.1%. The year before that, 2.3%. The year before that, 5.5%. We haven't had a down month in July since 2014.
Yeah. I mean, they're thin markets. There's less volume that goes through. But 3% this July, easily achievable. Yeah, I don't think we'll get 9, but I think 3% is easily achievable, which takes us back to new all-time highs.
What do you think about the divergence that, yesterday the dollar hit a fresh high for 2024, and the talk is of, if the Fed doesn't cut rates until, as you said, September, and a lot of people are saying even later.
I don't think they'll cut in September. I just know that we won't see anything in terms of changes in view on the Fed until the September meeting.
When do you think they're going to cut?
I'm not convinced they are this year, quite honestly, because as you mentioned before, I am of the opinion that there are upside risks to inflation in the second half of this year. I think the labour market is still tight. I know you're seeing some weakness around the edges, but look, we have a labour force problem. We have a shortage of workers. It's demographics. Baby boomers are retiring. We're not replenishing the workforce to the greater degree. So that's why we have a shortage of workers. That keeps wage inflation high. Housing market, we have an inventory problem. 50% of mortgages in the US are 3% or less 30-year fixed. The average outstanding mortgage rate is 4%. No one's moving. No. You're not going to move and get a 7.5%, 8% mortgage. Exactly. So there's no inventory, and that's supporting house prices. So this idea that we're going to see the shelter component of CPI come down in the second half of the year, I think the risk is that actually starts to move back up. If you look at it, lags house prices by about 12 months, and house prices bottomed last May and have been moving up since then. So those factors, to me, the risk is that pushes inflation higher, not lower.
And keeps the Fed standing pat. And do you see that divergence then? The ECB wants to cut. The BOE wants to cut. Do you see that divergence really offering opportunity?
I do, because if you look at the market, you look at the rates market, 1-year pricing, we're basically pricing the same amount of cuts for the Fed as we are the ECB, the Bank of Canada, slightly less for the Bank of England. So the market's got about 4 cuts in over the next year for all of them. Mm-hmm. That doesn't make any sense to me. When you look at US growth, close to 3%, you look at Europe, you look at the UK, close to 0%, I can see why they're cutting. They've still got high wage inflation. They've got a demographic problem as well, but they're growing below trend. So that, by definition, creates slack in the economy. They can look ahead a couple of years and say, that's going to raise the unemployment rate, that's going to bring down inflation. The Fed isn't there yet. We're still growing above trend. And the problem with that is that means you can't cut rates. And confidently, and they keep saying being confident, that inflation will come lower to their 2% target.
Absolutely. Great conversation, Lee. Thanks so much for coming. I really appreciate it. Lee Farage there from State Street. Coming up, Micron fails to live up to some of the loftier expectations.
I was expecting things like slightly below consensus in the near term, but I expect next year to look much better than what most analysts forecast.
We'll take a closer look at the chip maker next. This is Bloomberg.
I think this will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I was expecting things like slightly below consensus in the near term, but I expect next year to look much better than what most analysts forecast for Micron. So it's just a game of being patient 1 or 2 more quarters.
Micron is selling off this morning after failing to meet Wall Street's higher expectations. Some investors were expecting a bigger payoff from the AI mania that has swept the market, but it's fair to say that Micron actually met the average estimates. They forecast sales between $7.4 and $7.8 billion, and the average estimate was for $7.58. They showed earnings in their forecast of 108 a share, and the average was for 102. So why are they off 5%? Let's ask Bloomberg Technology co-host Ed Ludlow. He is in San Francisco. And Ed, I guess the idea is you just have to be in NVIDIA right now. You just have to really beat expectations by a mile.
It's really interesting because in many ways the fate of NVIDIA and it ramping up the sort of deployment of its new products directly correlates to Micron. Because if you think about a server, you have trays of components, and in one tray you have the GPU or AI accelerator from NVIDIA, in the first instance the H200, and around that H200 you have 8 of Micron's HBM3E, high bandwidth memory chips. And so like when you think about the big picture of what's just happened, the investors are kind of looking at the numbers and saying, we thought it would be more quickly. But in their defense, Sanjay Mehrotra, the CEO, did actually give us more data than I've seen him ever give before in how that product is ramping up and what revenue is going to be this quarter, the current period, moving into the next fiscal year.
By the way, I kicked off my career here at Bloomberg about 25 years ago as a tech reporter, a print reporter, covering Micron as a maker of DRAM, which is like a commoditized version of memory. You've schooled me recently in the new, which is high bandwidth memory. Talk to us about the products.
So high bandwidth memory is basically DRAM in multi-layered form. Think of it as a cube. If DRAM, which is about 3 gigabytes of memory, is a thin square, you stack in the first instant 8 of them on top of each other. 8 times 3, 24, you get 24 gigabytes of memory. And high bandwidth memory is really important in the AI context because when you're training a large language model, how quickly you can access a pool of data directly correlates to how good that large language model is. In other words, the latency of calling on the data and getting a result, both in the training and inference side, impacts performance. The design of stacking DRAM one on top of the other just makes it very quick. It reduces latency, and you can get data in higher volumes instantaneously. And it's a competitive market. Micron's done really well to get in with NVIDIA and sort of partner themselves in the H200 product. But SK Hynix is doing really well in that field too. In fact, the laggard is probably Samsung. But all three of them are gunning for this market, and whoever comes out on top, you know, it's not as commoditized or cyclical as historically DRAM is in the context of mobile phones or personal computers, things like that.
All right, Ed, I'm going to keep watching your show so I don't have to research this stuff myself. Bloomberg Technology co-host Ed Ludlow, he co-anchors that show with Caroline Hyde, starts at 11 a.m., a show that you don't want to miss if you care about participating in the revolution. Now, for some of the sector price action that we're watching this morning, let's get to Bloomberg's Abigail Doolittle. Abby, what do you see?
Another really interesting sector day from the standpoint that we have the S&P 500 down fractionally at this point, probably trying to flip higher, but most sectors are lower. Financials down 0.4%, even as all the big banks pass the Fed stress test, materials, healthcare, but small losses. To the upside, though, communication services, of course, one of those mega cap tech sectors, energy and real estate. If we take a look at the banks after those stress tests over the last couple of days, we are seeing a bit of a decline here, down about 2%. That KBW Bank Index down 2% over the last 3 days, Matt.
All right, Abigail Doolittle, thanks very much. Coming up, we're going to give you the market-moving events that you need to be watching this week. You can bet inflation is one of those. That's next in our trading diary. This is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
This is Bloomberg.
Here's what you need to be watching this week. We're going to get pending home sales at the top of the hour, so type EcoGo for that. Then a Treasury auction on $44 billion of 7-year notes this afternoon, plus Nike reporting earnings after the bell. Tonight brings the first debate between President Joe Biden and former President Donald Trump. And then we'll round out this week with the all-important inflation reading. The Fed's preferred gauge, PCE, comes out tomorrow. It's one that you don't want to miss. This has been the Countdown to the Open. I'm Matt Miller. This is Bloomberg.
biggest risk in property and casualty, is that now climate change?
Yeah, so absolutely. When you look at natural catastrophes, the number of events has significantly increased, and not only the very big events like hurricanes, but also what we call secondary perils, so wildfires, floodings, and drought. And this leads to the fact that you have far more events and therefore a much higher cost of all of the natural catastrophes.
How do you really assess the risk of climate change? Because how can you possibly know whether there's going to be a hurricane or a flood? Is it just based on the past or the projection of the future? Or how do you do that?
Since the dynamic has changed, we need to also look forward. And what we do a lot, we work a lot with scientists who understand what the warming of the Earth and climate change will mean for the question of taking risk. And secondly, we take much less risk than we used to take because we have to be careful.
So let's suppose there are a lot of hurricanes. Is that good for property and casualty insurers or not? Good because people say, well, there's going to be more hurricanes, I should buy more insurance, or not good because you got to pay a lot of claims?
It depends. I would say it's good because it creates the awareness to do more prevention. What we see today is that, as I said earlier, there is more events. It becomes more and more difficult to insure, and therefore we work a lot with our customers around preventions.
Or other authorities.
Could face bigger challenges next.
Fed was going to keep rating World Cup. This is a 3.
As the economic picture.
Covering the intersections of Hollywood, Silicon Valley, and beyond.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday right here on Bloomberg. Context changes everything. Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Thursday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube, so you can head over to youtube.com and search Bloomberg Podcast. That's where you'll find us. We are on Supreme Court watch today. We may get some rulings. If we do, we'll break them for you in just moments. They usually come out here in the 10 a.m. hour. Coming up, we're going to talk to Jonathan Palmer, Senior Healthcare Analyst at Bloomberg Intelligence. What's going on with our friends at Walgreens? Stocks getting creamed here. Nathan Dean, Bloomberg Intelligence Senior Policy Analyst, will give us the latest coming out of Washington, D.C. I think the banks did pretty well on their stress test, and maybe they can buy back some more stock, pay some dividends. We'll get the latest there. Jake Silverman, Bloomberg Intelligence Semiconductor Analyst. He's going to break down the Micron earnings for us, which are so important for this tech space. We got a lot coming up, just coming up in the next hour, and we will certainly stay on top of these markets. A little bit of green on the screen here. Let's kick everything off with Mr. John Tucker in our studios.
All right, and we're being brought to you by Interactive Brokers Bond Marketplace. Access their vast selection and over 1 million global fixed income securities with no markups or built-in spreads and low, transparent commissions. You can learn more at ibkr.com/bonds. The major stock averages, they are edging higher right now, but the big focus, I'm going to start off with bond yields. The 2-year yield, more policy reactive, that is down 4 basis points. That's at 470. The 10-year, 5 basis points lower. That is at 427. The yield's falling after applications for U.S. jobless benefits rose to the highest level since the end of 2021. That, again, is giving a boost to stocks right now. The data suggests maybe rate cuts to the Fed sooner rather than later. And when it comes to markets, Chris Marenghi, the co-chief investment officer at GAMCO, well, he says he is playing it safe.
We're favoring what we call sort of defensive quality names. You know, I talk about utilities, I talk about some industrials with recurring revenue, et cetera. I don't think you want to be taking a whole lot of risk ahead of this election.
All right, some of the individual movers, Nora's going to take a deeper dive into some of these, but Walgreens Boots Alliance, we were talking about that, Paul, before, slashing its guidance, worsening retail environment. That, in fact, right now is the worst performing stock in the S&P 500. And then after the close, you got results from Micron Technology. That is lower. It forecasts disappointing investors. It wasn't bad, the results. It's just they weren't didn't meet up with the lofty expectations there. And Levi Strauss reporting sales in the latest quarter slightly missing expectations. S&P 500 right now up 6. That's up 0.1%, 5483. The Dow Jones Industrial Average up just a point right now. The NASDAQ 100 is up 55 points. That's a rise of 0.3%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex.
All right. Thank you so much, John Tucker. So here's breaking news from the Supreme Court. It's blocking the U.S. EPA's, quote, good neighbor ozone rule. So the Biden administration had a rule that would have meant stringent new emission requirements on power plants and pipelines in part of the country to stem some ozone pollution that wanders into downwind states. The justices, though, voting 5-4, put that EPA good neighbor rule on hold while courts consider some challenges pressed by some companies. We're going to get more on that in just a few moments for you. We're also keeping our eyes on watch for the rest of the Supreme Court decisions. Let's go to some of the individual movers, though. Norma Linda joins us here in studio. Nora, the Micron thing I think is fascinating because the numbers were really good. The outlook was really good. The lower end of some of the guidance was a little lower than estimated, but it feels like a hair-splitting situation.
Right. I mean, I think that all eyes are on this stock, and it seems as though Wall Street just has really high expectations, especially as we think about them really wanting a high payoff when we think about this AI mania that has been in focus. And as you mentioned, the forecast disappointed, and its fourth quarter sales it expects to be $7.4 to $7.8 billion, but some investors had their eye highs above 8 billion. And so we are seeing shares falling now down as much as almost 6%. But if we look at, yesterday's close, Micron had rallied 67% this year.
Yep.
So this day, I think it's a bit of a blip in the timeline here.
And it's not really impacting, just the broader NASDAQ. Even if you look at the NASDAQ 100 up about almost 0.3%. But if you look at NVIDIA, off about 1.4% today. And it just brings up that issue that at some point in the future, we will have the conversation of, oh, here is a missed guidance from an NVIDIA or someone else that's really been driving this AI train, and we'll see what that does to not only that stock, which could be substantial, but also the broader market. But here, again, NASDAQ's still trading higher here this morning.
Well, I want to take a look at apparel. Do you all wear Levi?
I am a
Levi jeans.
I'm a Levi person.
But I'm a big fan of denim. I get my jeans from Paris.
See?
Paris?
There's a Paris person. Matt Miller's also like some designer thingamajig. Ken, are you Lee or Levi, bro? Levi's, Ken's Levi.
I want to get back into Levi. I mean, I know I was in that when I was very young. I remember my mom used to throw me in some Levi's, so might be time to revive that. But we're looking at Levi today on the lower end. It's seeing its worst day on record, plunging as much as 18%. Now, this comes after it reported revenue that slightly came in below expectations, but this really underscores Wall Street's high expectations for this company. Its revenue was at $1.44 billion, which was just shy of estimates of 1.45, so just hair splitter there. It reaffirmed its full year outlook, and before yesterday's close, Levi had advanced 40% this year. It did say that sales from its own stores and website are still bolstering profitability, and that's according to the CEO.
All right, let's go to Walgreens just because it's falling the lowest level here since 1997. Wow. Which is so interesting because, McCormick did well. It's like, what are we spending on spices but not drugs? I'm trying to make an eco-narrative.
Make it make sense.
From all of these consumer guys, and I just can't find one. What are you hearing that was the biggest disappointment?
Yeah, I mean, it's really mixed, and it's funny because my team, when we were looking at all the stats, when we were trying to get some size and scope to this move, looking at this company, it actually IPO'd back in 1927. So this is a really old company here, and it is seeing a brutal drop after slashing its guidance, which is really pointing toward a worsening retail environment. And the CEO has really been trying to turn the business around. So I think that's really been the main focus as I'm speaking to different analysts, especially as we look at this in the midst of a rocky past few years, especially with a turnover in the executive ranks. And it did announce more store closings over the next 3 years, but did not announce further job cuts.
All right, Norma Linda, thank you so much. We appreciate that. Norma Linda giving us the breakdown of this market. So I think one of the big stories is Alex was just mentioning is Walgreens Boots disappointing results. Stock down 23% here, 52-week low, the lowest since 1997. So a big move there. Let's bring in Jonathan Palmer. He follows all this stuff for Bloomberg Intelligence. Jonathan, what's going on with our friends at Walgreens Boots?
Well, I think you can see from the stock reaction, nothing good is happening these days. I mean, the CEO came in last year, and there was a little bit of a halo effect on his hiring. I think that halo has dissipated, and investors were expecting more sooner. And it looks like, this is structurally going to be handicapped for at least another year. I mean, they talked about 75 cents of headwinds going into their fiscal 2025. I mean, if you rewind a couple years ago before the pandemic, this was a company that was earning $6 a share. Now it looks like next year it's going to be more like $2 a share. So investors are frustrated with waiting for the turnaround, and it looks like it's even extended further in the future here.
So what part of this is a Walgreens issue versus a macro issue?
Well, a little bit of both. I mean, they were very particular about calling out consumer weakness as one of the drivers for the downside this year. But really, it's, I think, more of a structural issue in the pharmacy space. They've been being pressured by insurers and payers for a number of years, and that doesn't look to dissipate. And so they're thinking, they and others like CVS are thinking about new models for pharmacy reimbursement, but, they're just between a rock and a hard place here.
Jonathan, how much of this 23% decline in Walgreens is a company-specific issue or more of an industry issue?
I think it's more company specific here versus industry wide. I mean, CVS has been doing okay in their pharmacy. They face the same structural challenges around reimbursement, what's going on in retail. Here, it's just you know, they glossed over some of those woes during the pandemic. They had a big sales leaseback program with their stores, which has now come to an end. And so they've been looking for ways to grow the company. You know, they bought Village MD a couple of years ago, and it sounds like now they don't really want to be involved with that asset anymore. And so they undertook a strategic review. I think investors were anticipating that maybe they would sell their Boots assets abroad. They would maybe do some sort of new deal with Village MD, and none of that's come to pass. So the wait is on for the turnaround, and there's no real inflection point in sight here.
Okay, so if that's the case, I mean, I'm going to ask you how low can we go, but like, what is then a reasonable valuation for a stock like Walgreens, where we don't actually know what the trough looks like?
Yeah, I mean, I think they're getting to the trough in terms of EPS and that multiple. You know, I think you can look back, and single-digit multiples don't usually stick around for that long, particularly with where the S&P is trading. So, you know, from a valuation perspective and an earnings trough perspective, I think we're close to the bottom here. You know, maybe not the absolute bottom. There might be a little bit more to go, but it's hard for me to envision, given what they're doing around these store closures, around monetizing some of these assets, that they haven't, you know, kind of gotten to the worst of their earnings power here.
All right, Jonathan, thank you so much. We appreciate that. Getting the latest on the Walgreens Boots situation, stock down 23%. Jonathan Palmer, he covers all that healthcare stuff and all the pharmacies and all that great stuff for Bloomberg Intelligence. Appreciate getting a couple minutes of his time.
Yep.
A lot going on here on the Supreme Court, as we expected, because they've been kind of, feels like dragging their feet in terms of some of these cases here, but we're getting quite a few here today. Let's bring in June Grasso. June Grasso is legal analyst for Bloomberg. June, there's a number of cases coming out today. The Supreme Court blocks the U.S. EPA's Good Neighbor Ozone Rule, and also the Supreme Court rejects Purdue's opioid pact with the Sackler Shield. I'll let you choose where you want to go.
So I think that the Purdue case is particularly interesting because this means that the $6 billion opioid settlement is now up in the air. The justices, and it was a little bit of a strange lineup, the justices said that the bankruptcy code doesn't allow for this in dissent. And what happened was the Sacklers were going to get the benefit of bankruptcy without actually personally having to file for it. So all the suits against them were going to go away in exchange for them paying this $6 billion. But they never filed personally for bankruptcy. So it was a very strange situation because the states wanted so much to get the the money for the opioids settlement, they went ahead with this. And a lot of the victims agreed with this settlement because of the money involved. And Justice Kavanaugh here says that this means, I'm going to find it. The first opinion was by Justice Gorsuch, and Kavanaugh said that today's decision is wrong on the law and devastating for more than 100,000 opioid victims and their families. And so this time the dissent was Kavanaugh and the Chief Justice and two liberal justices, Sotomayor and Kagan. So that's an unusual lineup. Also came out just now is the Jarkissi decision, and I'm trying to find out what the end was. It was 6-3. So this is a case about the SEC and the conservatives and conservative advocates are trying to take away power from federal agencies, as we've discussed before. And so here what they wanted to do is make sure that if you have to go to trial against the SEC, you can go in a federal court, not in an SEC court where you have, administrative law judges.
This takes away a big enforcement tool from the Securities and Exchange Commission.
It does.
It does. It's a really big decision for the SEC, and also because the cost of going forward in federal court, and also just, federal court cases are much more complicated. Another thing is you have people in the SEC who are trained, who know the area. In federal court, you have judges who may not necessarily and certainly wouldn't know it to the extent that the judges do in the in-house proceedings. And this could be a harbinger of the case that we've been waiting for that makes everyone's eyes glaze over. I always say the Chevron case, because it's about agency power.
What is the Chevron case? I'm sorry.
So the Chevron case, and I put it simply, do you want judges making decisions about expert areas like the environment or labor, or do you want administrators, people who have been in that, who are in there, who are expert in the area? And thank you, John Tucker. Will you read the opinion for me as well?
No, it's just like you have people whose whole lives are spent interpreting this stuff. They are the experts on it. Now they're saying we don't need experts. Maybe judges who have never experienced any of this stuff can make decisions on it.
What's so funny is the Chevron doctrine 40 years ago was pushed by conservatives. It was a conservative doctrine. And now it is the conservatives who have been trying to get rid of Chevron. This indicates to me that we may have more things coming up in that Chevron case. So, for years, they've been trying to get rid of it.
Because in part, it gives much more flexibility to agencies like the EPA to do things, to sort of help the environment, or as some might say, hurt companies who want to help the environment. But basically, much stronger restrictions on emissions, for example. And then if we pair that with the EPA ruling from the Supreme Court and blocking that good neighbor ozone rule, I mean, that feels like that's where we're headed for the Chevron rule.
Right. And they started a couple of years ago with the EPA. They invented a new doctrine called the Major Questions Doctrine to limit the EPA in clean water rules. So, I mean, this has been happening, and now it seems like the question is, is this the term that they're going to actually do away with Chevron? And what's interesting is that some agencies, like the Labor Department, have started making rules, and they're not basing it on Chevron deference. They're saying we have the authority to make this rule. We don't have to look for deference. So, but it's a huge deal. And when you look back, it's going to be one of the most important cases of this term, because it could throw agencies into just disarray if they can't. And also there'll be lots of lawsuits against these rules that the agencies have put in place. So it's going to be very messy if they do this.
So what's the theme of what we heard today from the Supreme Court?
Okay, so let me see. So we had this.
Is it a more conservative type of interpretations of various?
Well, the one on the SEC and the trials, that's 6-3. That was down ideological lines with the liberals in dissent. But the others were not. The Purdue case sort of stands on its own, I think. And what was the? Let me see. What was the
ozone?
SEC, the Shackler.
The Sackler. That sort of stands on its own.
Sackler, the EPA, and the SEC.
Right. Okay. And the EPA was 5-4, and that was another unusual Barrett dissent joined by the 3 liberal justices. And there's been some talk this term about Justice Barrett perhaps, being more open to interpretations and not being so confined to the strict originalist interpretation, textual. So we'll see.
Okay. All right, June Miguel, there you're going to be sticking around just in case. Coming up, Nathan Dean is going to be previewing tonight's debate. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. With this Bloomberg Business Flash, major stock averages slightly higher right now. And also we have bond yields. They are falling. Stocks in the S&P 500 right now roughly split between the gainers and losers. The index hovering near the all-time high that it set last week. Walgreens Boots Alliance plunging right now 22%. This is the worst performing stock in the S&P 500. It reported results that fell shy of forecasts. Also, they cut their outlook. The company said it's going to also close hundreds more stores in the next few years. And then you have the best performing stock in the S&P 500, McCormick, the spice maker. Those shares up 6.1% after beating analyst earnings forecasts. Treasury yields, again, they are falling after latest economic data. That was the total number of Americans collecting unemployment checks, up, reaching the highest level since 2021. So that suggests sooner rather than later from the Federal Reserve in terms of rate cuts. Two-year yield right now, 4 basis points lower. That's at 470 to 10, down about 5 basis points. That's 428. S&P 500, 8 points higher. 54.86 on the index. The Dow Jones Industrial Average is up 48 points, and the Nasdaq 100 right now, that is 70 points higher. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex.
Thank you so much, John Tucker. This is Bloomberg Intelligence Radio. Happy Thursday, everybody. I'm Alex Steele alongside Paul Sweeney. We cover all the news in business, economics, and finance through our lens of our Bloomberg Intelligence analysts. They cover 2,000 companies, 130 industries worldwide. They know everything. And one of them is Nathan Dean. He is Senior Policy Analyst for Bloomberg Intelligence. He joins us from Washington, D.C. There's a stress test we can get to in a second, but I really am curious as to what you're watching in the debates tonight. And I set it up as in the expectation game. Ooh, wait, hold on. We got a Supreme Court ruling. It's, the Supreme Court allows emergency abortions in Idaho for now. And this was the case that if the woman's life was not in danger but was compromised, would it be legal for a doctor to wind up performing that abortion? It looks like the Supreme Court allows emergency abortions in Idaho for now. June Grasso still sitting with us in the studio. June, give me your take.
So this is a sort of kick the can down the road decision, because what they're saying is that the case was improvidently granted. So it's dismissed because improvidently granted. We call it a dig. And that means that we shouldn't have taken the case in the first place. And the justices were split 3-3-3. So the three liberals thought that the federal law supersedes the Idaho state law. The three concurrences, which were the justices in the middle, this really shows you the setup of the court. The justice in the middle, the Chief Justice, Barrett and Kavanaugh, said we shouldn't go forward with this case. We should send it back. But they didn't endorse any particular theory. They said this case has changed since we got it. And the three in dissent, Alito, Thomas, and Gorsuch, said no. The state should have the right to say that you can't have abortions unless the mother's life is in danger. So the setup was really weird. Now it goes back to the Ninth Circuit, and there's more litigation. This could come up again, and the issue will come up again probably because Texas has a similar law, and the Fifth Circuit, which is so conservative, has not allowed the federal law to supersede the state law. So Justice Ketanji Brown Jackson wrote a really, I thought, compelling concurrence saying that, we're not making decisions here. We're just kicking, she actually said we're punting. Yeah. We're punting. And meanwhile, the people like doctors and women don't know what the rules are because we're not making them.
Okay, so that was my question. So if I'm a doctor in Idaho and I have a woman that comes to me in the emergency room who is ill, that I can help with an abortion, but she's not dying, can I do it or not?
Now you can do it. You couldn't do it yesterday.
But you can do it today.
But now you can do it today.
But maybe not in a month.
And that was one of the things that the Justice Kagan wrote about, that there has been so many problems on the ground. Women have had to be flown out because doctors, this is criminal penalties for doctors up to 5 years. So doctors were afraid to make the decision, is this woman, is her life in jeopardy or not?
Or women had to wait until they went into like septic shock in order to get the treatment.
And even Justice Barrett, who is very conservative on the issue of abortion, talked about that. What about sepsis and things? So, and what was funny in the arguments were the women on the court were so much in tune with what was happening on the ground. And here you have Alito. Well, he's talking about there's a two words in the statute, unborn child, and if you put it in context, it doesn't mean the fetus should. But his dissent is all about it says unborn child, so it's more along the lines of what he wrote in the Dobbs decision. That's all I'll say.
What's the next thing from the courts on this abortion issue? Are there other cases? Because this one, as it kicked the can down the road, it's a punting type scenario. So it feels like we're just going to be bouncing back and forth between the states and the federal Supreme Court.
And that's why anyone who thought that what Justice Kavanaugh wrote in the Dobbs decision was okay, we're done with this now. Abortion, the issue is for the states, and that's just too simple, and it doesn't work in real life. So here, 2 years after that, we have two cases dealing with this, and both of them, if you think about it, both of them kicked the can down the road, because the mifepristone case, they went off on the procedural issue of standing, so that's coming back too.
Oh yeah. All right, June, we really appreciate it. Thank you so much. June Grasso, no doubt, will be sitting here with me while Paul's at the beach. She'll be here with me tomorrow at 10 a.m. I was just introducing Nathan Dean as we got this ruling. He's senior policy analyst over at Bloomberg Intelligence, and I was asking you, Nathan, about the presidential debate tonight. Who sits in the White House and who is in the Senate is critical for who is on the Supreme Court, for example. And these kind of decisions make it all the more important on who's going to be sitting in the White House. The expectation game is key. How have President Trump and President Biden set the expectations going into tonight at 9 p.m.?
So I think every candidate that goes into a presidential debate, going back the last 15 years, always tries to underperform, or at least announce in advance that they're going to, keep expectations low, because then if they perform well, then it just seems that much greater. But there's really two things that we are telling our investors or clients to look at too. The first is just the fear of the headline risk. Assuming that there are policy debates tonight at the debate, if you see something like President Trump double down on his statement of a 60% tariff on all goods coming from China, well, that's already been baked into the market, but anticipate a headline risk tomorrow. The other thing is that any statement from either President Biden or President Trump is saying, I'm going to do this or I'm going to do that, always just remember to put on, how is this going to get through Washington hat on? Is it going to be executive order, regulation, legislation? And a lot of times that statement just doesn't actually equate to the reality of the situation, where they can say lots of things, but depending on how the Congress plays out and how the regulators play out, ultimately the impact could be much less.
What do you think investors should focus on the most in this debate here, policy-wise?
So there's two things. The first is the geopolitical aspect, because the power of the presidency is a lot more powerful when it comes to geopolitical, national security, and trade. So any statement from President Trump or President Biden on Ukraine, Taiwan, tariffs, or so forth like that certainly should be paid attention to and then put in the back of your brain as we get closer to the election, because more statements will come. The other is tax related, because the Trump era tax cuts from 2017 expire for individuals at the end of 2025. So no matter who wins as president, the House and Ways and Means Committee and the presidency is going to be focused on tax next year. Now, it's going to be individual, and I think for most individuals, their tax rate is not going to go up. But if you are exposed to EVs, like if you have investments in Rivian or Tesla, for example, that could come up under a Trump presidency. High net worth individuals could see higher taxes under a Biden presidency. So next year is definitely going to be about tax, and something to pay attention to tonight.
Which is so interesting, because a lot of the argument is like, oh, well, what they say on that campaign trail is not going to actually materialize, or it'll be sort of, muted, or it won't actually wind up happening, which makes it so hard for investors to understand how to price any of this. What's your best recommendation here?
So I view it as just an incremental step. So if you think of like if you think that President Trump or President Biden comes out at a high level and says, like, I want to do this, but over time, the expectations lower and so forth, you'll get additional information as they go through the campaign trail. Look, tonight's debate is not going to set the stone in anything in terms of policy, but statement tonight plus a statement tomorrow plus a statement at the next debate, so forth, you'll begin to get a better picture of what ultimately could happen. So I'm not going to say that, you're going to see see massive headlines tomorrow saying the markets are moving based off of this. But, you know, we've told a lot of our clients, if you have an associate that wants to stay up late tonight, have the association take a look at it, watch this, and then send you a report in the morning.
All right, you can send me my report. You've got my email address because I'm not staying up watching this. I don't think the Yankees are on anyway. Nathan Dean.
Wait, you're off tomorrow. You technically can.
You're right. Hey, thank you for pointing that out.
You're
I don't have to
welcome.
get up at 4:20 tomorrow. Okay, very good. Nathan Dean, senior policy analyst for Bloomberg Intelligence. He's down there in D.C. for better or worse. That's where he's located here. So, are you going to watch the debate tonight?
Oof. Yes, no.
Yes,
I mean,
no.
like, I don't want to, but like I
feel like I
want
have
to,
to,
and
yeah.
I feel like I have to.
Although, you know, with the ground rules, no audience, the muted mics, it's not going to be as much drama as it could be, which is why I think some people would watch it just for the drama.
Maybe. But I am actually interested, you know, if any kind of policy is actually discussed. Like,
Right.
if it's just going to be barbs thrown back and forth.
I can tell you who the loser's going to be.
Jake
Intelligent
Tapper at
discourse.
CNN? Oh.
Intelligent
No,
discourse.
but you know, I don't know. Yes, I'll probably turn it on.
Okay.
Until
All
we
right,
have
very
family reading time at around 9:30.
Family reading
I'll give it half an hour.
Okay.
I'll give it half an hour, and then we'll circle back before that family reading time.
All right, very good. All right, S&P up 7 points, the Dow up 56 points, and the Nasdaq's up 47 points. That's 0.25%. We're going to have world and national news right now from New York City. Michael Barr.
Thank you very much, Paul, Alex, John. The U.S. Supreme Court tossed out Purdue Pharma's $6 billion opioid settlement, opening a new chapter of uncertainty for the company by ruling that the accord would improperly shield the Sackler family owners. The 5-4 ruling scuttles a plan that would have ended a mountain of civil litigation against the OxyContin maker. As part of the accord, Sackler family members had agreed to give up ownership of the company and pay the billions of dollars. The Supreme Court also curbed the Securities and Exchange Commission's ability to press complaints before in-house judges. According to the ruling, defendants have a constitutional right to make their case to a federal jury when the agency is seeking financial penalties. Last-minute preparations are being made ahead of tonight's presidential debate between President Biden and former President Trump. It's being run by CNN instead of the nonpartisan commission that had controlled such events over 30 years. We get more from Bloomberg's David Gura.
We saw during the last election cycle, Chris Wallace, who of course has had a long career in broadcasting, really struggle, no fault of his own, just to control the circumstances on stage. You mentioned the Presidential Debate Commission, which I think is all but defunct at this point. It, for many years, was this nonpartisan body that put on these debates, developed the rules for them, did this in a way that was entirely not commercialized. There weren't commercial breaks during the course of these debates. Tonight there will be. There'll be 2 moments when cameras will pull away and the candidates will have time to use the bathroom, have some water, not confer with their staffs.
Bloomberg's David Gura. We have special coverage of the CNN presidential debate beginning at 8 p.m. Wall Street time with a special edition of Balance of Power with Joe Matthew and Kaylee Lyons in Washington and David Gura in Atlanta. Listen to the debate on Bloomberg Radio or watch it on Bloomberg TV. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Insights, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Latest batch economic data reinforcing speculation the Federal Reserve will be able to cut interest rates maybe a couple of times before the end of the year. So right now that had bond yields lower and stocks, for the moment, they're higher. And NVIDIA joining losses in fellow chipmaker Micron Technology, whose forecast disappointed investors. We're going to take a deeper dive into Micron in just a couple of minutes. Those shares right now down 5.6%. NVIDIA shares 1.4% lower. Well, ahead of tonight's presidential debate, some investors already gaming the result of the November election and the impact on the markets. Robert Polonsky is the Chief Investment Officer at TPW Investment Management.
We think Biden is going to win in a landslide, and that's been our view since the start of the year. But we also hold the contrary thought that if Trump wins, it could be the catalyst for a dollar crash.
Among some of the other stocks in the move, after the results from Levi Strauss, those shares 17% lower. The company reporting quarterly sales that fell just short of estimates. Remember their original business plan in San Francisco?
Yeah.
Back in the 1800s. Don't go out mining for gold in the gold fields, but sell the supplies to the miners who are going out.
Okay.
And that was a business plan that was followed by some other companies, including this one.
Very good. I like how you brought it all together. Are you a Levi or Lee or Wrangler?
Levi. Yeah.
Levi.
No, I gotta be. I can't.
I've never worn a pair of Levi's, even when I was a kid.
I am guessing that the pants that you wear are like really expensive foreign.
No, not true. They are Parisian jeans.
Oh,
this
please.
is true, but they're not expensive at all. They're like
bought on
$60
sale.
bucks. They are bought on sale, but they're like 60 euros.
Okay.
I'm just saying. Like,
Do you have to go to Paris to get them?
third the price of Levi's. No,
I get
you
my
just
Levi's from the Princeton Army Navy store. How about that?
Good for you.
Yeah, good for you.
Sure.
I'm glad we worked this out, you guys.
S&P 500 up 9. The Dow up 108. The NASDAQ 155 points lower. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash. Paul and Alex.
All right, JT, we appreciate that. Alex Steele, Paul Sweeney live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast. We've got a new guy in here today, a new guy. We'll see how he does. Jake Silverman joins us here.
Don't worry, Jake. It's going to be fine. Don't let Paul scare you.
He's an analyst at Bloomberg Intelligence. I did not hire him, so I can't vouch for him. Hired everybody else. He covers the technology space. We got a great technology team all around the world. Everywhere you need tech people to be. Silicon Valley, Asia, New York, we got them as well. Micron Technologies, the largest U.S. maker of computer memory chips, as John Tucker was just reporting, dropped after its forecast disappointed investors. So we got an issue there about this chip maker. Jake, thanks so much for joining us here in studio. Give us the Micron Technology story. How were their earnings? Why is the stock trading where it is?
Yeah, thanks so much for having me on. Yeah, so 3Q was a beat, but the stock's up over 60%, or prior to earnings was up over 60% year to date. So coming into the quarter, expectations were fairly high. And so when we've seen a beat and raise as pricing has improved, supply has been pretty tight intentionally by all of the memory suppliers over the last year or so, because there was a severe demand reduction back in 2023. And now as we're looking into 2024, supply is tight, demand has stabilized, now is beginning to recover quarter to quarter. So investors, the market was really expecting another beat and raise, I think, coming into 3Q with the outlook being related to 4Q. So it being a sort of inline guide, at least on revenue, I think was pretty disappointing. And then you also have the AI aspect, which I think adds to a little bit of that multiple expansion that we're seeing. And so I think that plays a part into those expectations as well.
If we just separate for a second, if we can, like you have the AI growth story, which still was delivering on like all cylinders for Micron. And then there's the actual boring stuff, like the things that go into your phone and your computer and things like that. That market has been has troughed, but the pickup is when the question is, do we learn anything about when we might see a real recovery in that? Because Micron still needs that, right?
Yeah, so that was actually what was more important about the tight supply story from 2023 up until now, and then continuing through the rest of this year and probably into next year as well. The AI part of the story was pretty nascent up until more recently, and we're still only now starting to see AI revenue actually inflect. High bandwidth memory revenue for HBM3E, their product that's being sold into NVIDIA's H200 GPU, that was only about a little more than 100 million this quarter. There's other AI products as well, but yeah, we're starting to see demand, I think, stabilizing for smartphones, PCs, traditional servers, and we're expecting some growth throughout the rest of this year, primarily on the back of seasonal demand. So yeah, I think that those are definitely areas that investors are certainly going to be looking for. And if that demand doesn't necessarily materialize, then the pricing might not increase at the magnitude at which the market is expecting, which would impact revenue and margin growth throughout the rest of this year.
I don't know a lot about the semiconductor business, and I want to keep it that way. But what I do know is it's a cyclical business, and you got to get those cycles right. Yes. Does AI change the cyclicality? Do you think? Do we know enough to say that maybe it'll make it less cyclical or maybe more cyclical?
So yeah, it's a very good question. It's difficult to say right now. I think because this AI build out for AI infrastructure, it's so early. So we don't really know what that cycle will look like. But this is certainly a secular driver in the near term. AI infrastructure build outs from the hyperscalers are continuing. There's potentially some upward bias to those estimates and those expenditures this year. And so as long as that continues, that should have a multi-fold impact on Micron, because there's another aspect, which is, first of all, there's a couple aspects. First of all, HBM is margin accretive. And some of those other products that are related to AI are also margin accretive. So talking about high capacity DRAM modules, solid state drives, but HBM more so. But also HBM takes up additional wafer capacity.
High bandwidth memory, yeah?
Yes,
okay.
Yes, high bandwidth memory, sorry, HBM. But that also takes up wafer.
It took me like 10 minutes to remember that, so we don't want to say nice.
Yeah, sorry, I go in and out of HBM, high bandwidth memory. No, thank you. But also it takes up additional wafer capacity for high bandwidth memory. So about 3 times as much. So that actually, as you shift capacity away from standard memory towards HBM, that has a specific impact on the actual supply allocation. So as that demand continues to increase, that actually takes supply away from traditional markets as well. So ultimately you have a twofold impact where you have margin expansion, but you also have pricing probably increasing, even if demand is somewhat stable, because the supply comes offline from traditional end markets and goes towards AI.
Well, also to the cyclical point too, as long as AI chips keep getting better and better with each iteration, doesn't that take away some of the near-term cyclicality? Like, because by the time you get your old chip, then the new chip is like that much more awesome, so you have to go buy it, and at some point that runs out.
So it's difficult to determine actually what the magnitude of the cyclicality will be up or down. I think what this is really going to do right now, at least in the near term, will extend the current up cycle. So the peak is difficult to determine when that will happen. I mean, you can always guess. I don't think people are very accurate at guessing peaks and troughs, at least multiple quarters out. But in this case, as long as there's those secular demand drivers, we think the cycle can continue its upward trajectory.
Jake, great stuff. Yeah, we can bring him back, right?
Oh yeah, he was great. He was really good. Yeah,
excellent. Another tech voice which we desperately need, because we can't keep going back to Mandeep and Anurag.
I mean,
boring.
They have other jobs. They have day jobs.
Thank you so much, guys.
Yeah. All right, Jake Silverman, semiconductor analyst at Bloomberg Intelligence, joining us here on our Bloomberg Interactive Broker Studio, talking about the chip business. I guess there's lots of ways to play it. You don't just have to buy NVIDIA. I was talking to my financial dude yesterday, and he says, you know what, I did buy a little bit of NVIDIA a few months ago. I didn't tell you. I said, well, it's a non-discretionary account. You should be telling me. But no.
But aside from that.
No, but thank you.
Yeah.
Yep.
But, I guess the question then becomes, I think it was a report from Bank of America that like 1 in 4 hedge funds, or 4 hedge funds, 4 out of 5 hedge funds, I'll get it right. 1 out of 4, there it is, it's hard, guys. 1 out of 4 hedge funds have over 40% of their holdings in 5 stocks.
I mean,
that's not good, right?
No, that's not good. I mean, breadth of the market, isn't that supposed to be a thing? Isn't it supposed to widen out a little bit to make it a little bit more healthy market.
Exactly, and especially if you're a hedge fund, I was right. It's 1 in 4. See, I eventually got there.
Yeah, very
it just
good.
takes
All
a little
right.
while.
That's a good thing.
Okay, let's take a look at the market here real quick. S&P doing nothing. The Dow doing nothing. The Nasdaq doing nothing. How's that for a good market
Very good.
check for
That's a
you?
great
Yeah.
market
Okay,
check.
you're welcome for that. Anyway, we're looking at a bond market here with yields down about 5 basis points. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom. Look at company news. Boeing being sanctioned by U.S. investigators for sharing information about the federal investigation of that door plug blowout that left that gaping hole in that Boeing 737 MAX 9. The NTSB says that Boeing blatantly violated the agency's investigative regulations, as well as a signed agreement by providing non-public investigative information to the media and speculating about possible causes of the door plug blowout. This one from Business Insider. Walt Disney World is going to allow guests to make ride reservations a week in advance. But there's a catch. There's always a catch. You have to pay more. The official Disney Parks blogs says the Genie Plus service and Lightning Lane entry will be discontinued at the Florida theme park. Instead, guests can register for 2 new reservation programs that go into effect July 24th. The new passes will let guests make Lightning Lane reservations ahead of their trip. Now, of course, some guests have criticized Disney's theme parks for being way too expensive. Even Bob Iger, the CEO, he was shocked by ticket prices when he returned to the company back in November of 2022. The price for Lightning Lane multi-passes, that's going to vary day by day and by theme park, while the Lightning Lane single passes will vary by date and attraction. Alex is too young to remember Skylab, Paul. Remember those hats when it was
Thank
coming?
you. I love this.
This could make for quite a show. Elon Musk's SpaceX has been picked by NASA to build a spacecraft to guide the International Space Station out of orbit and have it burn up in the Earth's atmosphere after the lab is retired in 2030. And that's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
Happy Thursday, everybody. Happy Friday to Paul. I'm Alex Steele alongside Paul Sweeney. This is Bloomberg Intelligence Radio. We bring you all the top news in business, economics, and finance with our lens through our Bloomberg Intelligence analysts. They cover 2,000 companies and 130 industries all around the world. We also keep you updated on world and national news, and for that, we go to Michael Barr. Michael?
Thank you very much, Alex. Paul, John, the Supreme Court is handing down more opinions this morning. The High Court tossed out Purdue Pharma's $6 billion opioid settlement, opening a new chapter of uncertainty for the company by ruling that the accord would improperly shield the Sackler family owners. Bloomberg Law's June Grasso.
This means that the $6 billion opioid settlement is now up in the air. The justices, and it was a little bit of a strange lineup, the justices said that the bankruptcy code doesn't allow for this in dissent. And what happened was the Sacklers were going to get the benefit of bankruptcy without actually personally having to file for it. So all the suits against them are going to go away in exchange for them paying this $6 billion.
Bloomberg's June Grasso. The Supreme Court also curbed the Securities and Exchange Commission's ability to press complaints before in-house judges, saying defendants have a constitutional right to make their case to a federal jury when the agency is seeking financial penalties. Last-minute preparations are being made ahead of tonight's CNN presidential debate between President Joe Biden and former President Donald Trump. It is also coming much earlier than usual and is being run by CNN instead of the nonpartisan commission that had controlled such events for over 30 years. We get more with Bloomberg's David Gura.
The head of CNN is saying he wants the debate to harken back to what we saw in 1960, that first and pivotal debate between John F. Kennedy and Richard Nixon. Wants to sort of pare down all of the artifice, just focus on what these two have to say. We'll see if Jake Tapper and Dana Bash will be able to do that.
Bloomberg's David Gura. We have special coverage of the CNN presidential debate beginning at 8 p.m. Wall Street time with the special edition of Balance of Power with Joe Matthew and Kaylee Lyons in Washington and David Gura in Atlanta. Armored vehicles rammed into the doors of Bolivia's government palace Wednesday as President Luis Arce said the country faced an attempted coup and urged people to mobilize. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Alex, Paul, John.
All right. Thank you so much, Michael Barr. So staying with, I don't know, diplomacy, which is not what happened in Bolivia, but apparently China diplomacy and panda diplomacy is back. China has officially said 2 pandas are on their way to a zoo in the U.S., a sign that relations between both nations are improving despite their differences over a range of issues, including trade. Now, this time, the pandas are going to be at the San Diego Zoo, which is a bummer because they were in the D.C. Zoo before. I just missed them. It was very sad.
But you can still tune in with Panda Cam, I would imagine.
You can definitely still do your Panda Cam, which, like, if you have a bad day, you just put on your Panda Cam and, like, life is good again.
And the Panda Cam brings back the point that Michael Barr makes often, which is, how did these things ever survive in the wild? Because they're not the most graceful of animals. They kind of trip over themselves, fall over themselves, roll down hills.
But don't they have, like, insane claws that will definitely kill you?
I guess. But they've certainly got the cute factor. But I think this is a great move on the part of China. Because, I mean, it definitely builds goodwill. I mean, who doesn't like a good panda every now and again? And the San Diego Zoo is a great zoo.
Do we know their names?
Yes, we do. Their names are Yun Chuan and Jin Bao.
What does that mean?
Can we Americanize them to, like, Ling and...
I don't know. What do you...
Come on,
Look
Alex.
it up. This is your thing, you know.
You should know
the ancient names of the thing.
Well, you can still see the tiny red panda at pandas up at the Bronx Zoo in New York, and also the Central Park Zoo has a red panda. They're tiny.
Okay, red pandas though aren't actual pandas. They're like a different. They're called red pandas, but they're a different
actual
animal.
I'm just saying that's the
I learned
closest
this
you're
from
gonna
my
get.
daughter, who knows all the things. Apparently, I don't know what animal. Raccoon?
San Diego's a great town, so now you have another reason to go to San Diego. See the pandas.
Yeah, but then there's the whole jet lag. But yes, you're absolutely right. I don't know how long they're actually coming for, to be perfectly honest. But, you know, there will be a trip. The pandas
they're
are
not
really
there forever?
cool.
It's just kind of they're loaning them?
No, usually there's like a contract, which
And
is when
if
the
they
whole
have the
thing-
baby, do we get to keep the baby because it's born on American soil?
I don't think so. I think the
Panda immigration.
law.
Definitely up
do we
on
have
the
a panda
docket.
immigration law expert?
Oh man. Okay, much more coming up in the next hour of Bloomberg Intelligence Radio.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing